Good evening and welcome to this session of the live virtual coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. So today we'll be taking up a new topic, which is related party transactions, right? We'll be dealing with, so till last session, we saw up to 186, right? So today we're going to talk about 188, right? 188 and section 2, subsection 76. Now, though this is possibly part of the definitional sections, it's very relevant here because this section 2, subsection 76 defines your related parties. Who is a related party? So unless we are clear about that, it is not possible for us to understand related party transactions. Though you have maybe studied this in your intermediate, I'll be taking you through it again now, right? Which is also one of my complaints about this dichotomization of the syllabus in such a way that, the definitional part comes in the intermediate. My view is that, wherever a definition has a relevance to a topic in final, that definition alone should be taken out of that syllabus and put here. Especially definitions like this, which are, only relevant here. It may not be relevant in intermediate syllabus at all. Whereas there are some which are relevant both places, right? For example, special resolution is relevant in both the places. So let us begin with the definition of related party. We have Ms. Rashmi Kamath greeting me. Thank you. Good evening, madam. Let's see how many more people join. So we have, who is a related party? We are going to see the definition. This definition is lengthy and it describes every kind of related party. Okay. First, number 1, 276(1), 2, subsection 76, 1. The company may have a transaction with its director or his relative. His includes her. Okay, words indicating the masculine gender include the feminine also. So, his or her, director or their relatives. Director or his or her relative. Simple, that's simplest of all. So, any contract between the company and its director or his or her relative, straight away related party transaction. Simplest of all. Company and a KMP or his relative. Now, when you say KMP, what happens now? You already mentioned director here. Still, see, MD, WTD, company secretary, CFO, any other person who has been entrusted, one below the board level, all these people are KMPs, key managerial personnel. So, any transaction between the company and its KMP, a key managerial personnel, or his or her relative, related party transaction. Again, fairly simple. As I mentioned to you, KMP is CEO, CS, WTD, CFO, such other officers as may be prescribed, right? Including anybody who is entrusted with certain tasks. One below the board level also, they can be included. But that should be, the entrustment should happen through a board resolution to a KMP. That person, he becomes a KMP, key management or key managerial personnel, KMP. Then company and a firm in which director, manager or his or her relative. See, here they use the word or his. Here they don't use the word or. A firm in which relative or such or partner of such director. See, here they say firm in which director, manager or his relative is a partner. So, director, manager or his relative or partner is a partner. Right? The word here is manager they are using here. Director, manager or his relative is a partner. Firm. This would be a little more common. There could be a firm in which one of the directors of the company is a partner, or the manager of the company, if there is a manager, is a partner, or his or her relative is a partner. Right. So you notice one thing, we are seeing director relative, KMP relative, firm in which director or manager or relative is a partner. Now, what is the next progressive step? We will go private company. Think like that, you will easily remember this. So, individual, director, directly, director or relative, KMP or relative. Then firm in which director or manager or relative is a partner. Now, private company in which director or manager or his relative, got it, is a member or director. In case of a private company, it could be a member or director also. So, example, ABC Limited is entering into a contract with AB and Co. I'm sorry, AB Private Limited. ABC Limited is entering into a contract with AB and Co. AB Private Limited, in which Mr. A is a director. Related party transaction. Straight away. Okay. Now, next step, public company. Do you see that? Now, we saw private company. See the natural progression, public company. For public company, the definition is slightly, little, not complex, but different. So, a public company in which the director or manager is a director and holds 2% of paid up share capital along with relatives. See, this section applies to private company also. Definition applies to private company also. So, director or manager of the company is a director and holds not less than or greater than 2% of the paid up share capital along with relatives. Okay. So, director may hold it separate in his own name or together with relatives. So, whatever may be the combination, right? If director is holding any shares and is a director and holds 2% of paid up share capital along with relatives. Okay. Now, here is a question that I have put on the box there. Mr. A is a director in AB Private Limited. A is a director in AB Private Limited. He is not a director in ABC Limited. He is not a director in ABC Limited. Mrs. A is holding 5% of the paid up share capital of ABC Limited. Now, is this a related party transaction? Kindly give your view, if any. Would love to hear your view. This is a very peculiar case. That's why I have given names here. So, see, if you are going to remember it as a pure slide without names, ignore AB Private Limited and ABC Limited. That will be then director or manager of the company is a director and holds greater than 2% of the paid up share capital, whether himself or together with relatives. Here, Madam Srishti Goyalji, suniye na, section applies to private company. It is applicable to private company also. This section is not, private companies are not exempted from this section. Okay, kindly note it. Kindly, can you acknowledge it? Yeah, Bonnie Jose is not related party. The reason is this definition is like this. The and is so powerful. So, see, Mr. Bonnie, can you say why they are not related party? Because Srishti Goyal says it's not because AB Private Limited is a private limited company. There is no exemption for private company. Please, that is one important matter of this Companies Act 2013. Just check up. All companies are covered by this definition. Okay. So, two conditions together are not satisfied. That is why. Friends, the same situation when I come to 184. You remember 184? We dealt with it when we talked about interested director. There we use the word directly or indirectly. There, in that section. Therefore, see, 184 will be covered. which is why you have to be very careful. Certain situations, 188 will not apply, 184 may apply. Or 184 may not apply, 188 may apply. So what you need to first of all understand is disclosure of interest by director 184. Alag. Related party transaction 188 read with 2 subsection 76. Alag. Separate. Apply the rule here separately, there separately. Because something falls under related party transaction does not automatically fall under 184. You may have to make a note of this. Okay. So this is something, this is a very interesting part you may want to. This is also, see, this is where your intricate knowledge of this provision becomes important. This is how you can understand how, if at all there is a need for some kind of a structuring, you may want to advise your client based on this. So you can tell them, boss, don't enter into this transaction. Mr. A is already a director there. And you know, together these people are all holding more than 5%. So what to do now? A is not holding shares. Chalo. Then, or if he is holding less than 2%, then no problem. He ask him to not to be a director there. Let somebody else be director. That's all. 188 escaped. But 184 he may not escape. Okay, that's the point. 188 escaped. So continuing with our definition of related party, director or manager, okay, of the company gives advice, directions or instructions to the board of directors or MD or manager of any other body corporate. Any other body corporate, any transaction entered into with any other body corporate, the board of directors, managing director or manager of which is accustomed to act in accordance with the advice, directions or instructions of any director or manager of the company. Do you notice one more thing, what I am doing here? I'm actually repeating the section, but without reading the section, I'm looking at this diagram and repeating it. That way, if you are able to convert law provisions, some of these provisions into diagrams, you will find your ability to analyze it becomes easier. Next time, if you are in the exam hall and you are having a doubt as to what, then what you do, you use circles, arrow marks and squares, and you plot the situation on a paper. Immediately, any fallacy will be known to you. Your own mistakes will come out visibly. Instead of trying to do it within your head, try to do it on paper. Use diagrams, simple diagrams. Okay, what the way I have given here. Okay, suddenly you will find things fall in place. So what you need to do, you need to see if any other, so a transaction is to be entered into with a body corporate. Now you have to see who is the board of director or MD or manager of that body corporate. Then you have to find out, are these people such that they are normally used to obeying the instructions or directions or advice of the director or manager of this company. How you will know that now that this particular provision is highly factual. Highly factual. If you ask me, sir, how to find out, sorry. Later on, when you come to investigation, inspection and investigation, please remember, during an investigation only this will come out. Because once we see some transactions have been entered into with another company, the inspector may want to call that board of director of that company for a meeting. And they may have to come. When they come, he will ask them, who are you? How are you related to this guy? No, sir. We are also employed in this company. We are employees. We are nominee directors. We are nominated there as director. Okay. So normally, see, an employee is generally presumed to be accustomed to act in accordance with the directions or instructions of his employer. Or certain relationships, the presumption is that they will obey what this person says. But there's I don't know if this is a right presumption, but there is a presumption that wife will generally obey husband, and such fallacies do exist. But then in law, the presumption is initially, it is up to the husband to rebut that presumption and prove to the inspector, sir, my wife, how she will listen to me. Just come and talk to her tomorrow. Thereafter, the inspector himself might say, boss, 100%, she will not listen to you like that. Can't say. But by and large, the general presumption in the world is that brother will listen to, younger brother will listen to elder brother, children will listen to parents, wife will listen to husband. So that feeling is there. So therefore, such presumptions have to be tested. And so the inspector will put that presumption and say, hey, your own wife or your brother, you meant to say he won't do what you say. So I'm ignoring. In a way, he will be lifting the corporate wheel for a moment and he will say, related, ma. You two companies are related. Like that. That will usually happen only in inspection and investigation. Right. Oh, really complicated, huh? My God. Okay. So up to now, we were seeing bodies corporate, etc., etc. Now we are talking about subsidiaries, etc. So anchor in on the company, anchor on the company here. So then holding company. Company ka holding company, related party. Company ka subsidiary, related party. Okay. An investing company or the venturer, a venture capital company who has invested, related party. Associated company, which can exercise significant influence. That is, either this company or that associated company, significant. See, our company, this company is holding at least 20% of the total share capital or of business decisions under the agreement, under an agreement. So, A limit, this company is holding at least 20%, let us say 25% of the total share capital of this company. Then these two are associated company. Okay. Or this company can influence 20% of the business decisions under an agreement, more than, not at least 20% of the business decisions under an agreement. Then this fellow becomes an associated company, automatically related party. Okay. So these, and of course, the company's holding company may have another subsidiary, co-subsidiary, that is also a related party. So any transaction with any of these companies is automatically a related party transaction. So for the purpose of this class, the investing company or the venturer of a company means a body corporate whose investment in the company would result in the company becoming an associate company of the body corporate. So here, this company is holding at least 20%. Here, the investing company or venturer is holding at least 20%. At least 20%. So they have some influence, significant influence. Therefore, they become a related party. Right? Finally, we have 9. So 276(8) we saw. Now 2 subsection 76, 9. Such other person as may be prescribed. They are given the open ticket. Whenever they want, they can put some more persons. Okay. So rule 3 of the company's rules, okay, prescribes that director other than an independent director or key managerial person of the holding company or his relative with reference to a company shall be deemed to be a related party. So director other than, independent director, not interested director, director other than independent director or KMP, key managerial personnel of the holding company or his relative with reference to a company shall be, let me correct this because it gives a wrong opinion. I'm sorry, I'm correcting this quickly. While typing, it has come as interested director. It should be independent director, right? So, director other than independent director or KMP or his relative, okay, of the holding company. So, up to here, we didn't see holding company. Only company ka KMP, company director, KMP are relative. Now they say holding company ka director, KMP or his relative also is a related party. So this has been introduced in rule 3. Okay. So this is related party transaction. Actually not very complicated. Once you go through, what I have done is I have given you as far as possible diagrammatically. So later on, of course, as usual, I will upload this slide for your personal consumption. So try to use this and remember the provisions better. Okay. Good question by Ms. Srishti Goyal. Why independent directors are? See, again, remember, only in holding company, independent directors are not to be considered. Only in holding company. Here, in the original section, in the original, here you find very clearly they don't exempt independent director. Only when it comes to holding company, they say. Possibly because that's one step removed, right? Holding company, and that too, that holding company is independent director. Already that fellow has come through heavy, stringent conditions. He is not having any financial interest in the company, no benefit. You know that no pecuniary or other interest in the any transaction beyond 10% of his GP. Such a fellow, see one more thing. To understand, to give you an answer to your question, we have to understand, first of all, the fundamental question, which I should have taken up in the first instance. Whenever I teach a provision in company law, what do I ask you to consider first? I ask you to consider what is the purpose of this section? Why is this section at all there? So what is the purpose of this section? 185 was meant to prevent a director from siphoning the funds of the company through loan. 186 was meant to protect the company's funds from being wrongfully invested in useless investments or investments in which the directors are getting some benefit, etc., etc. So that's why we put a huge condition there. Now we are putting on regular transactions also. In 188, as we go into 188, you are going to see, we are going to cover all transactions: purchase, sale of immovable property, rendering of services. Everything is going to be covered here. So we want to be sure that any transaction entered into between a company and any of these related party should not give an, shall we say, some unfair advantage to the related party. The related party should not get any financial or pecuniary advantage over and above the arm's length price. See, of course, he can make a profit. Related party transactions are not prohibited. You can enter into a related party transaction. There can be a margin in it. You can make a profit, but the transaction should be at arm's length. Otherwise, it has to be approved by the members or the audit committee, etc. So that there will be a check and balance on the ability of the MD to enter into related parties, so that the funds of the company should not be siphoned into a vehicle. Suppose I form a private limited company with my relatives as directors, and I might also become director there. Then I start purchasing from that company. Obviously at a price which is more, shall we say, higher than the market, or some difference is there, that extra profit, additional profit goes to this company. And that company obviously is mine. So I get that full benefit now. Now all this is possible only if I am a whole-time director or a non-executive. See, if I'm an independent director, I will get nothing out of the transaction. Am I correct? I'll get nothing out of the transaction because by definition, an independent director gets nothing. He gets zilch. That being the case, even that's why they feel they have to exempt him here. Okay, is my answer to Srishti Goyal's question. But very importantly, while the law is exempting him here for holding company, such an exemption is not there for the main definition. In the company itself, independent directors are also included. But in a way that is absurd, because think about it. Suppose I enter into any commercial transaction with him, which is above the limit prescribed in that section, straight away he will no longer be an independent director. So this would cover those transactions where the independent director is entering into the company within the limit prescribed, up to 10% of his gross total income. And within that limit, they want to be sure that it is arm's length, which is why, I don't know how many of you will remember, at that time, when we were talking about independent directors, one of the exemptions we saw was, even if the independent director is entering into a transaction, pecuniary transaction with the company, his independence will not be affected if the transaction is happening at an arm's length price. It's happening at an arm's length price. So still he would be independent. Here also, that is why they linked it with 188. So here you will find one of the major exceptions for related party transaction is arm's length price. Suppose the transaction is happening between these two entities at arm's length price, then 188 will not apply. Straight away 188 will not apply. which is why they give that exemption there also. They said, since I'm giving this here, there also, if it's at arm's length, I will excuse him, is what they are saying. So even if it is exceeding the limit of independent director, if the transaction is arm's length price, I ignore it. Only non-arm's length price. I'll give a simple example. You are the auditor of a leading automobile manufacturing company. You are the partner of the audit firm, which is auditing a leading automobile manufacturing company. The company has a very, very premium luxury car in the luxury segment. Thank you, Shrishti. Thanks for confirming. So the company has a beautiful luxury car, just very, very reasonably priced, just 75 lakhs. Okay, just 75 lakhs. And but you want to buy it. And so the company says, hey, sir, you are our auditor. Please take it at 33.33% discount. Meaning you pay only 50, sir. We'll organize the loan also, Ji, no problem. Come to the showroom, take the car, go. The director is an independent director. The director is independent director. The company is giving a car, 50 lakhs, which is, let us say, more than 10% of his gross total income for that year, right? Because he's getting it funded directly through loan. So he'll be paying only a small amount, which is income, 10% of his income. No, more than that. Okay. You remember that provision, now? Now, I'm linking it there. Don't ask me, sir, you are teaching related party. Oh, you are suddenly going to independent director. What to do? That is the problem. You should be able to jump along with me because they are relating these two. I'm relating. Coming to the point, he is giving you, the company says, take it, sir. You are our auditor, partner of such and such big firm. You should be driving only this car. You don't go in your usual Innova, Krista and all. You go in this car. So they say, and you are also okay. I have to buy it because I'm partner of so and so firm. And they are also giving it at 33.33% discount. Okay. So I'm sorry, did I say auditor? Sorry, take it back. Take it back. You are the independent director. You are the independent director of that company. Sorry. Auditor also there's a problem. Actually, auditor also there's a problem. Your independence issue will come. But I'm not going there because that is really out of your syllabus. I'm not going there. But for independent director, it has come. So they're giving it to you at a discount. Now, will your independence, will you continue to be independent director or not? The answer is no. Provided this 33.33% discount is not a normal discount. Suppose the company has a festival discount, right? Say up to New Year, they are saying anybody who buys this car, we will knock off 2 lakhs from the price. No, we will knock off 2 lakhs from the price. To you also, they're giving the same 2 lakhs. They're giving the same 2 lakhs. Then there is no, the independence is not affected. Because it's an arm's length now. Aam Aadmi like me also will get 2 lakhs. You will also get 2 lakhs. Same discount they're giving. Maybe they'll give you some special treatment because you're independent director. Oh, gee, please come. They'll give you a cup of coffee or tea and then they will show you. Right? That's all they can do. So the discount they're giving you is the same as what they'll give to the general public. Aam Aadmi like me. Right? Then it's an arm's length price. And there is no problem. Your independence is not affected in any way. But suppose they give you this 33.33 discount and you take it. Forget your independent director post. That is gone. Okay? Your independence, the minute you cease to be independent, out. Locate your office and get out. Be careful. The small difference you should keep in mind. Same thing will apply to auditor also. Okay, is the point. If I remember right, your disqualification of an auditor. Okay. We'll come to arm's length price a little later. I thought I would make this point clear. I'm sure you are familiar with the definition of a relative, which you studied long ago. I do not know how long ago when you studied your intermediate course. Therefore, to jog your memory and to remind you, and because this definition is something that you might always have to remember, because as a practitioner or as a even in service, just as you join, say, Hindustan Unilever or Wipro as an assistant manager of finance, nobody is going to come and consult you on company law. Believe me when I say this. Unless you are in finance, you are reporting to, say, the head of the department, which is finalizing accounts. Balance sheet section will be there. That's a large company, there will be a separate guy whose job is to finalize accounts and report to CFO. So that will be a GM there, GM Finance who would be, or GM Accounts and Taxation who would be responsible for finalization of the accounts. If you join directly under him as assistant manager or something, below him there's 1, 2 levels, you are the bottommost in the rung. You are there and reporting to these people. Then maybe there's a chance you will be actively engaged in facing the auditors, finalizing, providing details and all that. Otherwise, chances are, but at any stage in your career, you might have to plan for your, client, for your company, etc. So you should know the definition of relative, section 2, subsection 77. So you are members of an into-undivided family are automatically related to each other, husband and wife, and as may be prescribed. Okay, so you have relatives who have been prescribed in the rules. Earlier you had Schedule 1A of the Companies Act, which prescribed 22 relatives. Okay, so they were relatives under the Companies Act. Compare this with the list of relatives under section 56(1) of the Income Tax Act. If you remember that, 56(1) gives a set of relatives. That is a little wider. That's actually more comfortable. It's pretty wide. Here you will find the list is very, very small. This is the old Schedule 1A. Just for your information, I'm giving 22 relatives. Whereas this is the new Rule 4. This is current. This is correct. This is old. Purana wala. Why I am giving? Just for information. It's like museum. I'm showing you. That's all. This is Tipu Sultan ka wall, sword like that. You just see it, look at it, gape at it and go. Nothing to do. This is the current relative. Very small, short and sweet. Father, mother, related. Brother, sister, related. Son, son's wife, related. Daughter, daughter's husband, related. That's all. Okay. No other relatives. Earlier, you see, you had son's son, son's wife, daughter's son, daughter's son's wife, daughter's daughter, daughter's husband. No, only one level. Individual, one level above, one level below, same level. That's all. Here you will see individual, 2 levels above, 2 levels below. Here, individual, 1 level above, 1 level below, same level. And no marriages. Brother, no marriage. Sister, no marriage. Why? Father, mother, of course, married. Don't get confused. Okay? Please. So, like that. Okay? Now, brother and sister, earlier you had brother's wife, sister's husband. No. Okay. See, that's this comparison only I'm giving this. Earlier, both the brother-in-laws, or shall we say both the brothers-in-law were related to me. Who are these both the brothers-in-law? You have brother's wife, brother, okay, and sister's husband. Okay, I'm sorry, not both. Only one brother-in-law is related. Which is that brother-in-law? Sister's husband is related. Brother's wife, sister's husband is related. Wife's brother is not related. Do you see any of the in-laws here? Do you see any of the in-laws here? Of course, you don't even see the wife. But wife is here, yeah, don't forget. Husband and wife. And without wife, how you will create all that son, daughter and all, you tell me. Okay. So, wife is covered. Wife is a relative. But on the wife's side, nobody is a relative. Wife's father, wife's mother, wife's brother, wife's sister, nobody is a relative. Okay. Why I give this to you? Because just as usual, one of my humorous jokes, and it really, see what happened was, when I got married, some dispute with my father-in-law and all, both of us were angry, both attacking. Luckily, at that time, I was started teaching company law. So I had written a book and all. So at that time, Schedule 1A was there. So I took the Companies Act book to his house and I told him, look here, sir, please see, this is the government regulation. These are all relatives. It says relative. I said, see, do you see your name there? Father-in-law? No. Brother-in-law? No. You are not my relative. Go. Okay. So all in-laws are outlaws. All in-laws are outlaws. They are not there. I mean, think about it. You will see a planning opportunity here. Friends, you might think I'm wasting your time. You might think I'm giving you some unnecessary information. Being students of chartered accountancy, you have been told that you should be always serious, no jokes, no fun. Not like that. No, at least it was not like that for me. Okay. There's a deep planning here. In fact, there is a question in the examination where they say, very loosely they say, there was a contract entered into between the company and the MD's brother-in-law. No, that itself is very loose. Because suppose in the old schedule 1A, if you say brother-in-law, I can't accept it. I'll ask, sir, don't say brother-in-law. Tell me, is it wife's brother or sister's husband? Wife's brother or sister's husband? See, in India, sister's husband, higher level, respect. Okay, when he comes, we have to give him a lot of respect. Wife's brother, okay, we have to respect him. I'm not saying you should not respect him, but when you go, they have to respect you. But whatever it is, only sister's husband is covered in this schedule. In those days, in this schedule, brother-in-law not covered, not a relative. So in the exam, if you see brother-in-law, father-in-law, immediately alert. Antenna should come up. Not a relative, not a relative, not a relative. Okay, so that's what. This was once asked in the exam also. I don't know how they gave the answer, but brother-in-law is not a relative. So if it's not a relative, straight away you are not crossing the threshold. Straight away you are not crossed the threshold also. What I mean by threshold is it is not even related party. Where is the question of 188, applicability of 188? That is why we are struggling to understand and internalize 2 subsection 76. Everywhere you will find relative, relative. That relative, brother-in-law is not a relative. Okay? Brother-in-law is not a relative. Just for your information. Like that, sister-in-law is also not a sister-in-law. Be careful again. Any type of sister-in-law. Brother's wife also not relative. Wife's sister also not relative. Okay. Now the new rule 4 is very less. Again, in your overall comparative study of subjects, which I have now, I hope with my classes, you are becoming more and more tuned to this linking up subjects and studying. You compare this with 56.1. Section 56 relative, I would say. Section 56 is Income Tax Act. Check out that. There are similarly other provisions also. You check out all that and then see whether the word relative is applicable. Okay. Of course, father includes stepfather, mother includes stepmother, son includes stepson. Okay, and brother and sister again, stepbrother, stepsister. Suddenly, surprisingly, I find stepdaughter is not included here. I don't know why. Daughter is there, but it's not stepdaughter. Just it is not going to be of any use to us. Okay. And remember, daughter's husband is, see, one more very, very peculiar thing. See, my daughter is married and in Coimbatore. Now, see how peculiar it is. As per this diagram, right? Think clearly, you'll understand. My daughter's husband is my relative. But for him, suppose you put my daughter's husband here, for him, I'm not a relative. For me, daughter's husband is relative. But for my daughter's husband, that is my son-in-law, I'm not a relative. Why? Because if you put him here, you don't find anywhere wife's father is not there. So I'm not a relative. It's very peculiar. Son-in-law is related to father-in-law, but father-in-law is not related to son-in-law. Okay. These are all, shall we say, paradox of law. But that's how the law is. So awareness is important and try to remember these nuances of definition of relative, right? Here we go to the crux of the topic, which is what are the transactions, related party transactions. So these transactions are those requiring consent of board of directors by a resolution at a meeting of the board. At a meeting of the board, right? But do you remember? This can be delegated to the audit committee. Up to 1 crore. You know that. Okay. We saw that. When we saw audit committee, again we had related party. That's why I told you. I will again talk about it when we come to 188. Now I'm talking. So this is normally requiring meeting of the board, but it can be delegated to the audit committee, right? Up to 1 crore. And there again, the audit committee itself can give criteria up to 1 crore. They don't have to come to me, you do it like that. Within that limit, they can do it. See, basic idea is to protect the company from a transaction which would amount to siphoning of funds. That's all. So long as there is no intentional siphoning of funds and there is a good internal control mechanism and the process is there, nothing wrong in related party transactions. See, for example, we have our own component manufacturing company, which is run where the common directors are there. We buy from them, nothing wrong. For all you know, we may be able to manufacture cheaper than outside because our process may be good. Or one of the important costs that is associated with the cost of raw material is transport cost. Think about it. If I buy it from another supplier, the goods are being moved all the way from his godown to his factory to my godown or my factory. Now, there is a cost associated with that per unit. Whereas this factory is in the next shed or this factory is in the next to mine. So we can even have an internal gate. Okay, and through that gate, the lorry can move. And I can use palletization. I can use yellow square. I can use Kanban. Because it's my captive, yeah. I simply have to give a Kanban. He will start producing. Common management. Nothing wrong. The only question you will be asking me, and rightly so, is it's a strategic question. Why are you having it separately, separate company? At the time we decided to do, maybe we wanted to benefit, we wanted the benefit of ATI. Maybe we wanted the benefit of setting up a new industrial unit. Something. So we wanted it to be new. So for that 8 years, I will claim the tax benefit. Something like that. I'm just pulling something off my hat and telling. Thereafter, what I will do, I will merge it back here. So these are all strategic issues. And as a future senior finance professional, you should be aware the strategic implications of these sections. Okay. So you might want to do that. Then you need to be careful. The minute you desire it for tax purposes to have a separate entity, it will obviously be a related party, boss. How you will have some third Tom, Dick, or Harry as a director. You will have only your people will be there or your nominee will be there. So no problem. So long as the transaction is going to be at arm's length price. We ensure that. That's all. Okay. Is the point. Now, so the following transactions require a board resolution. Sale, purchase, or supply of any goods or materials. So, sale, purchase, or supply of any goods or materials. Okay. So, goods are sold or purchased. Materials are supplied. I seriously don't know what these materials are, but they've been using it. This word it's coming right from the old section. See, it's an older section, 297. It's still coming from there. But 297 was not so elaborate. And 297 did not define related party transaction. It did, but 297 had its own definition of related party transaction. Now they have shifted the definition to 2 subsection 76 and linking it here. Okay. So these are the transactions which require board resolution when they are entered into with a related party. Right? Sale, purchase, or supply of any goods or materials. Selling or otherwise disposing of or buying property of any kind. So when a director is selling property to the company or director is buying property from the company, straight away related party transaction. Leasing of property of any kind. Leasing, when I'm giving it on lease. Availing or rendering, both sides. Availing or rendering of any services. Appointment of any agent for purchase or sale of goods, materials, services, or property. So you are entrusting it to a related party. Pricing will be there. We have to see what is the commission you are paying. Now, such related parties' appointment to any office or place of profit in the company. Such related parties' appointment to any office or place of profit in the company or its subsidiary or associate company. Okay. So, what is the office or place of profit? If that person is getting any money from the company, it is an office or place of profit. Simple. Mr. Donkey is the director. Mrs. Donkey is appointed as some sort of a consultant, or Mrs. Donkey is appointed as some kind of a special officer, some nonsense designation, marketing officer, whatever. And she's being paid a fat salary every year. Okay. Fantastic. No problem. Is she qualified for it? That's all you're going to ask later. Otherwise, it's a related party. It requires approval of the board, BOD. And so that is the problem. So office or place of profit means any appointment like that. Then you want to be, it's a related party. Na? Suppose MD's daughter is being appointed as company secretary, qualified. It's a related party transaction. Okay, because she is a daughter now. That's why. Underwriting the subscription of any securities or derivatives of the company. So, underwriting agreement. There again, it should not be a related party. So, 7 items are there. Now, these 7 items up to a limit can be done by the board. Can be done by the board. Board itself can take the call. But there are circumstances when RPT, related party transactions, require prior approval of company by an ordinary resolution. So, where the transaction exceeds the limits prescribed here, okay, which is why you remember, do you remember when we are delegating to the audit committee, when we are delegating a transaction to the audit committee, what did we say at that time? That's why I said you may not understand it now. When you come to 188, you will understand it. Please throw your mind back and you remember when you are delegating the power to approve related party transaction to the audit committee, specifically we exempted those transactions which are governed by 188. So, up to 1 crore audit committee can approve. But if the 10% of the annual turnover of the company itself is less than 1 crore, then you cannot delegate it to the audit committee. Because such transaction require prior approval of company by an ordinary resolution. So the board should consider it. It cannot approve it. It has to take it to the, it has to consider it and in principle say, we want to enter into the transaction, board minutes is prepared. Then they will say, as this requires shareholder approval, they may pass a resolution saying subject to the approval. But even if they say subject to approval, they cannot enter into the transaction unless ordinary resolution is passed. Okay. What are the situations where the value of the transactions is greater than or equal to the limits mentioned below? So are you clear about this? Normally up to 1 crore you can give to audit committee, no problem. But if you want to delegate to audit committee, the transaction should not be hit here. If the transaction will be more than 10% of the annual turnover, even if it is less than 1 crore, you cannot. More than 1 crore, less than 1 crore. If it is exceeding 10%, straight away it goes to members. But less than 1 crore, up to less than the limits, up to 1 crore you can go to audit committee. Above that, board. Above these limits, shareholders. So this is the order in which you have to. So here they have beautifully provided for hierarchical approval of transactions so that materially non-impacting transactions, small tukada transactions, straight away audit committee can do. Audit committee itself can identify tukadas and say, hey, you don't come to me, approved. Up to 1 crore, but less than these limits. I repeat, up to 1 crore, but less than these limits, audit committee. Above 1 crore, but less than these limits, board. Above these limits, only members, prior approval. Friends, this is a little crucial. So if this had been a regular physical class, you could have seen my face, which you are not able to do today for a technical reason and or rather technical failure on my side. And I can't see your face ever. So kindly, 1 or 2 of you confirm to me that you have understood this provision. The 3 limits, audit committee, board, above that. If you have 1 or 2 of you, just confirm to me clear. Or if you have a doubt, you ask me here. Because this is a very, I would say this is a little tricky. If you have a challenge in understanding this, you may get into trouble in the exam. If you want, I will even repeat it once. Normally, up to 1 crore, provided 1 crore is below this limit on the screen now, below 10% of this, whatever. I will explain this one by one to you. Yeah, got it. Wow. Thank you, Sudhirji. So just thank you, Sudhir, for that immediate. So Up to 1 crore, provided it is less than these limits, audit committee. 1 crore and 1 up to this limit. Okay, up to less than this limit, board of directors at a meeting of the board. Above these limits, shareholders, prior approval, ordinary resolution. So, this is not rocket science. It is not something esoteric that only company secretaries can understand. Everybody can understand. It is nothing. Okay, please remember it. Thank you, Srishti Goyalji. Thank you, Sudhirji, for your immediate response. So, what are these limits? Just we saw here 7 transactions. Now, those 7 transactions we'll find are governed here. Okay. Sale, purchase, supply of any goods or materials directly or through appointment of agents. Appointment of agents also they are covering here. So whether you do it directly or through appointment of agents, then if the value of the transaction is above equal to 10% or more, greater than or equal to 10% of the annual turnover, right? Selling or otherwise disposing of or property of any kind directly or through appointment of agents. 10% of net worth. If the transaction exceeds 10% of net worth, then you have to go to the members. So the net worth is pretty huge. That's why I said it could be well above 1 crore. Then up to 1 crore, you can give it to audit committee. But if anywhere this is less than 1 crore, then straight away, no audit committee, no board. You have to go to company. Leasing of property of any kind, straight away 10% of turnover. Availing or rendering of any services, directly or through appointment of agents, 10% of turnover. Appointment to any office or place of profit in the company, its subsidiary or associate. Monthly remuneration exceeding 2.5 lakh rupees. So, you want to appoint the MD's wife as a consulting advisor, some nonsense term. How much? So then you said, sir, Mr. Srikanth, I want to appoint madam as, consultant to this company. Definitely, Ji, what is that? She should be appointed, no doubt about it. But only tell me how much remuneration are we going to fix, sir? About 5 lakhs, Srikanth. Sir, 5 lakhs possible, but you have to go to the shareholders for approval. Are you okay for that? We'll see. Okay, tell me how much I can give. Up to 2 lakh, no, up to 2 lakh 40, 99,000, no problem. 2 lakh 50, 2.5 lakh rupees. Sorry. So what do you, okay, Srikanth, finally tell me how much. 2 lakh 30,000, no problem, without any problem. If you definitely want to give fine, no problem, call the company secretary, call a meeting, pass order resolution, take it. Okay, that's all. It's a listed company, it will be a problem. It's an unlisted public company or a private company, no problem. Enjoy. Just pass the resolution and do it. That's all. Go ahead. Give 5 lakhs, 6 lakhs. Who can prevent you? Okay. Remuneration for underwriting the subscription of any securities or derivatives thereof of the company, 1% of the net worth. Okay, 1% of the net worth. Got it now? So A, 1, 2, 3, 4, B and C. Right. So we have to see. Now you will ask me. You have used the word turnover, you have used the word net worth. Where do I find the figure? Turnover or net worth referred to in above sub-rules shall be on the basis of the audited financial statement of the preceding financial. So, for example, if you are going to approve a contract now, by now your audited, hopefully your AGM will be over, your audited financial statements are jolly well available, you have to use that. Suppose AGM is still not over, you have taken time from the registrar, many fellows have done that, and you are not only the auditor has signed, then whatever it is, audited financial statements are to be taken. As of now, you cannot play games with 22 because you can keep on shifting. How long you will keep shifting? Now you have to give 22. Whether you like it or not, you have to finalize and give 22. Okay. So if, okay, sir, April, May, how I will get? Correct. Then you take audited financial statement of the preceding 21 car you use now. Okay. That is how it is. Net worth means, again, you have to take as on the last date of the financial, audited financial statements. Aggregate value of paid up share capital, etc., etc. You know, this is a definition given in the exam. I'm sorry, given in the act only. Okay. Now, remember, do you remember interested director? there any director who is a related party is by definition interested in the transaction. Am I correct? So the director who is a related party, he is interested, he shall not be counted for quorum. And there also he shall not vote. Here also, no member of the company who is a related party shall vote on the ordinary resolution. So this is a real challenge for private companies, because they might want to go to the shareholders and get the approval. Who are the shareholders? Again, these fellows. So they are again related. Nobody can vote. It's a real conundrum. Okay, how to overcome it? You think you have to advise, because you have to sell some shares to a non-related party. Then those non-related parties alone will meet, pass the resolution. So that is why now do you understand why relative definition becomes very, very important for you? Okay. Why salary paid to related party is considered as a related party transaction. It's not given to other than related party. Madam, you are asking a very complicated, the question is a little bit confusing for me. Let me read again. Why salary paid to related party, okay, ... is considered as a related party transaction? Because it is paid to related party. Madam, your question itself has the answer. Come on. Why it is considered as a related party transaction? Because it is a related party, like that. Okay. So once I asked my sister-in-law, are you going to Bangalore? He said, how do you know we are going to Bangalore? He said, now you told me that you are going to Bangalore. That's how I know. So the point I'm trying to make is, it is a related party transaction because it is paid to related party. Okay. It is not given to other than related party. Then also related party? No. If it is given to somebody else, how can it be related party transaction? So your question is, I hope, clarified. Sir, like leasing can be done with anyone. Therefore, this is done with related party, but salary paid to related party is only for him. That is the point. Related party, he or she is getting the benefit. See the point. Okay, let me put it easier to understand. Your father has a huge company where he is the MD. He wants to appoint you as financial controller. Will the salary be beneficial to you or not beneficial to you? The chances are that the salary will be beneficial to you, right? The doubt is that, that is why it's called a related party transaction. Therefore, we say, sorry, if it's a related party transaction, about 2.5 lakh rupees, go to, this is the best explanation I can give you. Okay. So I'm still not clear on your leasing comparison. Leasing can be done with anyone. Therefore, this done with related party request. Similarly, you can appoint anybody. You can appoint anybody as your financial controller. Why related party? Got the point? Because related party. Therefore, there should be a control on the transaction. Okay. Thank you. At least you are confirming that you are understanding. Earlier, there used to be a lady who used to ask doubt. After I give such explanation also, she will not confirm that she has understood. Then I will beg her, Madam, have you understood like that? Thank you for confirming. See, that is the problem. So many related party transactions are bogus transactions. Simply, many of these related party transactions are also tax planning transactions. See, think about it. Today, it is not possible. In those days, companies used to pay almost 34%, 37%. So, it made sense for us to pay MD's wife and all salary. So, when you pay MD's wife a salary, it becomes a related party transaction. So, that also has to be considered and taken into account. So, like that you have to do. So, tax planning. Because then when you split it now, then we get some kind of a slab benefit. Average rate will come down. But today, with the new tax rate, the new regime, you will find actually corporate tax rate may be lower than individual tax rate. And sometimes it may be foolish to send it to the MD, but rather to better pay the tax in the company itself. Okay, like that. So that is how it is. Hello, moving. So now, my dear friends, Section 188 shall not apply to any transactions entered into by the company in the ordinary course of its business, provided it is at arm's length. Should be at arm's length. So any transaction entered into by the company in the ordinary course of its business at an arm's length is not covered by Section 188. Meaning all my blah, blah, blah audit committee, board of directors, prior, nothing. Suppose you are buying goods from a related party, arm's length transaction, chod do. Selling goods to a related party, arm's length transaction, chod. Like that. Any of these. Okay, going to Srishti Goval's favorite point. You are paying a remuneration to a related party, arm's length. But how will you say it is arm's length? That you have to be clear. So how would you say that the salary paid to the related party is an arm's length price or arm's length value? So a transaction between two related parties that is conducted as if they were unrelated so that there is no conflict of interest. This is how they have defined it. There should not be any conflict of interest. For example, let me put it very bluntly. MD's daughter is also going to be hired, is being considered for being hired. She has certain qualifications, she has certain experience, etc., etc. Then we go to an agency and we ask them, kindly get me similar experience, similar knowledge, similar qualification candidates. How much will we have to pay them? In an arm's length transaction, normal negotiation, they come for the interview, no influence of related party. How much should I pay them? That is an arm's length salary. If I pay anything less than that, no problem. If I pay more than that, sorry. So they say related party transaction or less, no problem. Suppose there is an arm's length price and you are putting it below that price. Wow, that is great. Suppose you are putting it at arm's length. So the real challenge is any transaction you are entering into, first you should establish that it is an arm's length price. Now, friends, Companies Act Walas are not really expert in arm's length transaction. You and I are going to become CA, I am CA. We know what is an arm's length transaction. No. One second. Srishti Goyal ji, 2.5 lakhs is the limit for approval. 2.5 lakhs is the limit for approval. So if it is more than 2.5, you have to go to shareholder for approval. But when you are appointing the MD's daughter and you are paying her 3 lakhs, the question is not if it is less than 2.5. No, it is not arm's length. Even less than 2.5, it may not be arm's length. 188 will cover, you have to get approval by board or audit committee. But the point is, how to justify it is arm's length. That's what I'm trying to tell you. You go to an agency, you ask them to recruit and say, I'm willing to hire for this position. This is the JD and thing. Then what are the CVs? So compare it with the CV of the MD's daughter. For the same level of experience, expertise that you want for this job description, if you hire in the open market, what is the salary you will pay? That may be even 10 lakhs, yeah, no problem. Per month, 10 lakhs, no problem. But if that is the price you will pay, then there is arm's length transaction. But you have to have, you should create record and keep it. Simply, you cannot tell, the MD cannot tell this arm's length transaction. Company secretary cannot tell it is arm's length. That is where I'm saying you and I as chartered accountants, we know how to find out. What is an arm's length transaction? A price which is determined between two disinterested parties, an informed buyer and an informed seller, when they determine the price between themselves. Or better still, if you are rendering the same service, or if you are availing the same service or selling the goods or buying the goods from an unconnected third party, uncontrolled price. You remember where I am coming from? That will become the comparable uncontrolled price. Cup. I don't even want to waste your time on a topic like transfer pricing, on which I'm sure each one of you is an authority. Okay? That is where you'll go. I have to determine cup. And I say, hey, this is the cup. Comparable uncontrolled price. Or comparable uncontrolled. That price only I am paying. At that price only I am buying. You prove it, then it is arm's length transaction. So this needs this type of documentation before you want to get out of 188. But if you don't have the documentation, or maybe you went for the comparison of salary and for the qualification of the MD's daughter who studied only BCom and who that too arrears, you want to pay her, say, even 2 lakhs, you go for BCom arrears candidate. If you hire in your company, how much you will pay? I don't know. Even if you are a big short company, 30,000 rupees. That is arm's length price. So yours is arm's length price? No. Then what you have to do? Comply with section 188. That's all. I hope Srishti Goyalji's question is also answered here. Okay. So no problem. So long as it's answered. But whereas if that lady studied in Harvard and she has come from Harvard and she's already worked in a US based company in the similar industry. Now she's coming. Believe me, she may not want to come. Getting her down to join this company is going to be so minimum. She'll say, come on, this is my dollar salary. This is my benefit in wherever I am now in Dallas. I will come to your company, but what will be? There I have a comparable because I can go around and shop. I can ask I can go to Deloitte, I can go to EY, and I can tell them, hey, similar person, do you have anybody? And or Randstad, and they will give me 5 similar biodata. They will also give broad packages. And they'll say, this is the package they're getting. No negotiation, this, that. We will arrive at a price. That price is the arm's length price for this lady. No problem. Okay. So, nothing is so esoteric that it cannot be done. It needs data. Once the data is with us, we can take a meaningful, informed, clear-cut analytical decision as members of the institute. There is no need for us to, to know how to do. Easily. If there is a path, somebody has already put a path, use that path. Don't reinvent the wheel. Okay? If there is no path, don't hesitate to take the axe in your hand and cut a path through that and move on. Don't wait for somebody to put the path. No, you put the path and you move there. And then so that the path that you make, somebody else will come. I'm giving this analogy or I'm giving this metaphor of cutting a path to help you understand your role as future members of our institute. Our knowledge is a growing knowledge. The knowledge that we possess in the Institute of Chartered Accountants of India is a growing knowledge. Every member is contributing to this knowledge pool by way of articles, by way of research articles, by way of seminars, by way of lectures, by way of so many ways we keep adding to this knowledge. It is everybody's duty to add to this knowledge. 1. 2. When the knowledge is already available with the Board of Studies, with the Institute, which you've already created, take it. The Institute is creating so many, what shall I say, materials and, things like that. So, one second. What is happening here? Give me 1 minute. I don't know why today I'm having heavy problem with my technical stuff. I have plugged in my PC, but I'm not getting. Give me 1 second. I'm having some technical problem. My battery is running low. 1 second. Mr. Nisarg. Mr. Nisarg. I'm having a small problem with my battery also today. My laptop is really making a mess of my life today. Can I have a small break now, say for 10 minutes? And can we start again after I correct myself? Huh? Friends, we have come to one stage where we can stop here for 10 minutes for a quick break. Then we'll go until 9 o'clock. So right now, I'm just announcing a small break. Okay. Welcome back from an early break. Normally, I give the break around 8 o'clock. Today, I've given it a little early. I hope you could go and have a cup of chai and you are now. And possibly this is also a good time to have a break because we had a heavy stuff, heavy going. We were talking about related party transactions, about limits and all that. But fairly simplified provision. And one huge relief is arm's length. Suppose you are able to show that the transaction is at arm's length, you get out of the grip of 188 itself. You just walk out. There's no need for you to comply with 188 at all. So this was not there in the earlier law. In the earlier law, they had only limits. And if you exceeded the limit, then any transaction needed to go. Earlier law had a lot of stupidity. That was there. See, that way, 2013 Act has made a lot of influence. See, earlier law, this was 299, section 299 of the earlier law talked about this equivalent of related party. 297 dealt with disclosure of interest. So these two sections were very well dealt. They were there, but they had certain disadvantages, stupid disadvantages. Also, they said up to 5,000 rupees exempted and all. They said, what is 5,000 rupees? Okay, and so that part of it is now out. And what you have is a more, shall we say, rationalized provision. Good. Moving on. Every contract or arrangement entered into with related party to which subsection 1 applies shall be included in the board's report along with the justification for entering into such contract arrangement. This is justification. Why only this person? Why you don't have anybody else in the world who can supply? Why only at this price? Okay. Please understand. See, these are the small questions that you will answer when you are auditing or responding to audit. Should I disclose all related party transactions? No. You should disclose only those transactions to which related party transactions to which subsection 1 applies. If it's arm's length transaction, 188 does not apply. So you need not disclose. Okay. Though it's a related party transaction. So question should be, you have to really ask yourself, is it a related party transaction? So first you have to clear 2 subsection 76. Then, so maybe for that you might have to go one step back. Is the person a relative at all? 2 subsection 77. Then 2 subsection 76. If you say it's not a relative at all, no related party transaction. Okay, related party transaction, definition hit, but arm's length price, stay away out. So it's not an arm's length price. Then only you have to come into this limit. Then what you should ask immediately is, the first question you have to ask yourself, does it exceed these limits? Okay. No. Then it's up to you. It's up to 1 crore, audit committee. 1 crore, 1 and above, board of directors. Up to this limit. Just you check that up. But if it exceeds this limit, even if it is less than 1 crore, you have to get approval from company by auditors. Try to keep all this in mind while answering questions in the examination. Okay. Suppose the transaction requires approval by way of a resolution, then consequence of obtention of board approval or prior approval by ordinary resolution, as the case may be. What happens? Will the sky fall on my head? Will my head be chopped? Not really. First level. Okay, boss, it has happened. MD has entered into the transaction. Possibly he was not advised about 188. Later on, maybe quarterly review, you as the auditor came in and you made them understand, hey, Baba, this is a related party transaction. You have not got the board approval. Oh, my God, what to do? Get it ratified by the board now, or call for a general meeting and get it ratified by the shareholders, so long as the gap between the date of entering into the contract and the date of this approval ratification should be within 3 months. So that's why I said quarterly review. But suppose you come for the final audit and you see gone, because ratification should be done within 3 months from the date of entering into the contract, right? Chalo. Not possible. First level gone. Second level, not ratified by the board or shareholder as the case may be, or too late, beyond 3 months. Either way, or within 3 months you went to the shareholders or the board, and the board of directors said, no, we are not going to ratify it. Shareholder says, no, not ratified, whatever it is. Then the contract is voidable at the option of the board. Contract is voidable at the option of the board. Yesterday, I think when we were talking about somewhere in some other context, I was talking about fiduciary duty of a director. See, directors have a fiduciary duty. Nothing prevents them from making money at the expense of the company. So long as the profit is a disclosed profit known to the company or a profit which is normally earned by anybody in the transaction, no problem at all. It's only when an undisclosed profit is made or the transaction is manifestly, I repeat, transaction is manifest means openly. Transaction is openly prejudicial against the interest of the company, then the board has the option to say, sorry, we will not accept it. So the power has been given to the board to void it. Now, earlier I might have talked about voidable transaction, voidable contracts, or actually you can say voidable contract. You have void agreements and voidable contracts. Void agreements. Okay. You cannot have a void contract. It's very rare void contract because contract is one which is enforceable at law. Void, it's not enforceable. Therefore, we cannot have void contract. Void agreements are there. And voidable contracts are there. What is a voidable contract? A contract which can be avoided at the instance of one or more parties thereto, but not at the option of the other or others. Now, who can void the contract? Only in one peculiar situation, where the consent to a contract is obtained by undue influence or coercion or fraud or misrepresentation, then the contract is voidable at the option of the party whose consent was so obtained. Sorry, you will have to appreciate Contract Act to understand this provision. I know this is a little too long-winded. You will not find it in material. You will not even find it in any book written by any author because the link with Contract Act is very relevant here. And I'm giving it more as an interest to you. See, so under the Contract Act, when does the contract become voidable? Where the contract is induced by any one of the four methods where free consent is not there. Same situation apply here, right? The company is an independent artificial entity. That company's money is being now used in this contract. Who is influencing the company? The director. Director is in a fiduciary position. So clearly undue influence. You are that MD. You are in a fiduciary position. You have misused that fiduciary position to induce the company to enter into a contract. Therefore, the company, as represented by the board, the brain, now has the right to avoid the contract if it is prejudicial to the interest of the company. So this is mainly a situation where the MD usurps the power of the board, enters into a related party transaction, which is clearly not in the interest of the company. I use the word manifestly prejudicial to the interest of the company. But if you think that's two big words, Shashi Tharoor type of words, then we'll use simple words. Clearly not in the interest of the company, then the contract is voidable at the option of the board. Okay. Now, all this presupposes an independent board, which is the problem in India. There is no big difference between the board and the MD. Board will do whatever the MD says, but we are assuming that. So, especially for a listed company, this is quite possible because in a listed company, 1/3 will be independent director. And they might say, sorry, no, contract is clearly not in the interest of the company. Never. He has entered into it without our consent. Gone. So these things could happen. Okay. But if otherwise the contract is harmless and nothing is there, okay, chalo, the board may accept the contract also. So second level, you can do it. But if the company has incurred any loss on account of this contract, once it is avoided, if it's accepted by the board, no problem. But if it is avoided, see, it is voidable means the court will avoid, the board will avoid. Once the board says no, then from that day onwards, the contract is void. Once the contract is void, nobody can be sued on it. The party cannot sue the company cannot sue. But if the company has paid any money, has incurred any loss on this account, that can be recovered from the director. So, because he is the person who caused the loss, right? So we can recover it from the person. So you can take proceedings for recovery of loss against director or employee, contravening the provision also. If they have contravened the provision, you can take. Director or employee who are responsible should be punished. Penalty is there, fine. Listed company, the penalty is 25 lakhs, fine. Any other company, 5 lakhs. Okay. We already saw the audit committee now. Again, I'm covering it here for the sake of clarity. Or wherever the audit committee has been empowered, it may make an omnibus approval for related party transactions. In case of transactions other than transactions referred to in 188, and where audit committee does not approve the transaction, it shall make its recommendation to the board. So, transaction should be one which is delegated to the audit committee. It should not be one which is covered by 188. I'm just quickly showing this to you. Should not be covered by 188. If it exceeds the 188 limit, then audit committee get out, straight away shareholders. Okay. Then the audit committee will make a recommend to the board. Okay. These special provisions shall not apply to a transaction other than a transaction referred to in 188 between a holding company and its wholly owned subsidiary company. Okay. Any transaction involving any amount less than 1 crore entered into by a director or officer of the company without obtaining the approval of the audit committee, not ratified by the audit committee within 3 months from the date of transaction, then that transaction shall be voidable at the option of the audit committee. Right. So here they give the power to void to the audit committee, which is why you will find huge powers have been given to the independent directors. Because remember, independent directors are going to be majority of the audit committee. Do you remember? Majority of the audit committee will be independent directors. So they can say no. If the transaction is with related party to any director or is authorized by any other director, the director concerned shall indemnify the company against any loss incurred by it. That is, it's a related party transaction. It is with the party who is related to a director. Then, or is authorized by any other director, then the director concerned shall indemnify the company against any loss incurred by it. We already saw this in committees. I'm just reiterating here because there is a 188 link. Right. So when the audit committee is giving omnibus approval, rule 6A, okay, the audit committee shall, after obtaining the approval of the board of directors, specify the criteria for making the omnibus approval. That is, within that 1 crore given to the audit committee will say, hey, the following transactions up to this limit don't come to me. Don't come to me. You take your own decision. And maximum value of transaction also in the aggregate, which can be allowed under the omnibus route in a year. The maximum value per transaction which can be allowed. And extent of manner of disclosures to be made to the audit committee at the time of seeking omnibus approval. So the procurement section will come and say, these transactions, please clear it for us. Up to 1 crore we will do. So no problem. Please go ahead and buy these list of components up to 1 crore, place orders. We will not discuss, even though it is with the related party. Okay. See, normal transaction, I'm not controlling. Normal transaction, the internal control mechanism is there. Related party transaction is breaking through the internal control mechanism. And we are saying, give it only to this party, because it's a related party. Only then the internal control. See, normally, if I'm the purchase department, I should float a tender or a letter of intent. Then the letter of intent will be responded to. I will get tenders or I'll get firm quotations. Then those quotations will be delivered in sealed cover and it will be opened on a day when all these people are present. Then first technical will be cleared, then financial code will come. It will be opened. L1 will be selected. This is how government departments work. This is how central government works. This is how public sector works. Private sector also, a certain level of maturity. This is how technically they work. So they'll say, take 3 quotations, give me, out of that, select L1 after technical has been cleared. When all of them are cleared technically, all of them are equal on level, then whoever is lowest will be selected, no doubt about it. If you select anybody other than L1, straight away you will get caught in internal audit. Why go all the way to statutory audit? In internal audit, you will get caught. And if internal auditor reports to the audit committee, straight away. So why I'm saying this is the process that has to be followed by all companies. But when it comes to related party, we are breaking their process. The board is saying, give it to so-and-so because they're related. Maybe there is some benefit there still. Okay. So they say in those cases, you have to give all these data. Okay. So the review may also be done by the audit committee of the transactions and all that. Okay. Also, the audit committee may give a detailed list of transactions which cannot be subject to omnibus approval by the audit committee. So these transactions, even 1 rupee, you come to me. When they are giving this type of omnibus approval, the audit committee shall consider the following factors: repetitiveness of the transactions in past or in future, justification for the need for omnibus approval. See, similar transactions going to happen on a weekly basis, monthly basis. Again and again, if it's going to go to the audit committee, it will become a useless activity for the audit. Audit committee will become a kind of a chop walla where he has to simply keep approving. So they'll say, up to this, don't come to me. Repetitive, repeating, same. And also, as I described, the process is there. We have cleared it. This guy, though related party, is coming. We are aware of it. Approval is given once and for all. We give up to 1 crore, take it. The audit committee shall satisfy itself on the need for omnibus approval. Give it. Okay. Fine. The omnibus approval should contain the name of the related party, the nature and duration of the transaction, maximum amount, the indicative base price or current contracted price, and the formula for variation in the price, if any. Suppose steel, I am buying from a related party. Steel price is subject to price fluctuation. So we should also give the formula. What is the base price of steel? Quotation has, usually steel quotations will have base price. And then they will quote plus or minus so much. So that again will decide who will get it. Because anybody who uses a higher contingency margin will lose. So he will say, okay, plus or minus 0.01. Then okay, if the price goes up or down, we will accept it. Otherwise, revision will happen. The current market price, how to determine that price, that has to be mentioned. And how frequently will it be revised, has to be mentioned. Okay. So usually steel and other commodity prices are determined that way. Otherwise, you cannot. So you enter into a base price or a current contracted price, and then in case there's a price hike, there will be an automatic price revision. All that can be built into. Any other information which is relevant or important for the audit committee to take a decision. Even at the cost of boring some of you to death, let me assure you, this topic has close link with auditing. When you're writing an answer on auditing, you might be tested there also on this, because there's a clear internal control issue there. And there's a clear link with purchasing, sales and all, commercial. So definitely there's a link with auditing also. Right? But where the need for the related party transaction cannot be foreseen and aforesaid details are not available, the audit committee may make omnibus approval for such transaction, say contingency transaction, contingencies up to 1 crore, like that. Okay. So the omnibus approval shall be valid for a period not exceeding 1 financial year and shall require fresh approval after the expiry of the financial year. The omnibus approval shall not be made for transactions in respect of selling or disposing of undertaking of the company. Any other conditions the audit committee may be. So if you're going to sell the whole undertaking, sorry, not only can you not do it here, if it's a related party, 188, plus sale of undertaking itself requires 181 year approval by the shareholders. Okay. So, right. So to an extent, we have completed the basic topic of related party transaction, 188. Now, I'm not able to see any major questions. So I'm happy to presume that you have no questions, and I'm happy that you are able to understand the topic. Moving on. Next is 184. Very important section. Disclosure of interest by director. See, we saw that while calculating the quorum, an interested director should not be included for counting quorum. Again, I will repeat. Dubara, I'm saying this again. For calculating quorum, you will need to calculate total strength. For that purpose, you will consider interested director, disinterested director, everybody. Once you calculate the quorum, keep the quorum number in your hand and then see the attendance. Then in that attendance, if any interested director is there, kick him off. Remaining directors who are disinterested, are they equal to the quorum? No. Are they less than the quorum? Sorry, no quorum. That's all. Suppose then only that exception will come. Suppose the disinterested directors are equal to or more than 2/3 of the total strength. Then 2 directors who are disinterested present shall form a valid quorum. That's all. Very simple summary. But then, how will I know that he is interested? If the company secretary, will it have some jnana drishti by which he will see? Yeah, he can. He can obviously go do a global search to find out, or using a DIN. I can find out where all he is a director, what he is doing, everything I will know. But the law says it's not your problem. You anyway do it for your own interest. You hire a company secretary, or you get a report from a company secretary saying this person is a director in all these companies, etc. But again, you can get only for companies from the company database. You can get for LLPs from the LLP database. Firm, how you will get? Relatives, how you will know? So they are saying all these are to be disclosed by the director. Suppose director is a director in another company, you will know. Suppose a relative is a director holding shares, how will you know? Unless you know who are the director's relative. So I don't have to go and find out who his relatives are and all. He has to tell me by giving a disclosure. So there are 2 types of disclosures. You have one called event-based. The other is periodic. So event-based disclosure are there, periodic disclosure. And there are 2 types of contract. Proposed contract or arrangement. Then any other contract or arrangement. Means existing contract. See, a contract is entered into by the company. At the time when the contract is entered into, director is not interested. Director is not interested. But subsequently, director becomes interested or concerned subsequently, right? So that is called any other contract. Existing contract, of course, and a proposed contract. Okay? It's called any other contract or arrangement. Now, there are 3 possibilities. Director is not interested. Matter is going to be taken up in future. We are going to enter. The discussion comes up at the board meeting. At that board meeting, he has to make the disclosure. Because first time when it is taken up, we are going to enter into a contract with Dubakar Limited. Oh, Dubakar Limited. Sorry, I am a director of Dubakar Limited. You have to make the disclosure. And thereafter, you will become an interested director. And you should not be counted for quorum, should not participate in the meeting, right? Are you able to understand? Okay. So you have to make a disclosure. Okay. You have not become a director. The company has already entered into a contract in which you are interested. You are not a director. Now you become a director. That is an existing contract. Where when you became, the day you became director, that contract is there. So at the time of becoming director, you have to make a disclosure. See, these are all the companies where I am a director. Please ensure that you are not having any contract with any of them. That's all. Third example, you become a director, there is no contract. No, you are a director, there is a contract, you are not interested. Subsequently, you become interested. Then that is also covered. So 3 possibilities. Okay. So every director of a company who is in any way, whether directly or indirectly, concerned or interested in a contract arrangement or proposed contract or arrangement entered into or to be entered into with, okay, these people should make a disclosure. This is an event-based disclosure. So whenever you are going to enter into a contract with these entities, then whether directly or indirectly, if the director is interested, gone. So here they say, director is holding greater than 2% share, or he is a promoter or manager or CEO of this body corporate. So holding more than 2% share, or he is a promoter or manager or CEO of this company. So when he is concerned or interested in any contract, straight away he has to make a disclosure. Similarly, director is a partner in a firm or owns or in any way connected with any other entity. If you are going to enter into a contract with that firm or other entity, you have to give an event-based disclosure. Entity could include sole proprietorship also. The sole proprietorship in the name of the director, covered. Okay. Trust wherein the director is a trustee, covered. Firm in which he is a partner, covered. Okay. In these two cases, at the time of entering into the contract or arrangement, the disclosure should be made. Okay. So if it's a proposed contract or arrangement at the board meeting at which the contract or arrangement is discussed. The minute it's coming up for discussion, you should stand up and say, sorry, I'm interested. Now I have this question. Okay. The disclosure is made at this meeting. Can director participate at subsequent board meetings at which the contract is discussed, say for price revision, etc.? I'm not very comfortable about this. But in my humble view, no. But there seems to be an open doubt here. But in my humble view, once he says he's interested, till he is interested, he can never participate in the discussion. He will not be counted for quorum. He shall not participate. Okay. Now, suppose it is any other contract. So the minute he becomes a director forthwith, or at the first board meeting after he becomes concerned or interested, he has to make a disclosure. And in both the above cases, director should not participate in such meeting. Both the cases. Right? So, periodic disclosure. Once you have become a director, you have made event-based disclosure, then the first board meeting when you become a director, you have to make one disclosure. Thereafter, at the first board meeting in every financial year, you have to repeat, you have to make any changes in your detail, you have to give. Fresh disclosure should be given at the first board meeting in every financial year. This is called periodic disclosure. What is to be disclosed? The concern of or interest of any director in any company or companies, firm or companies, bodies corporate, firms, other association of individuals. Concern or interest includes shareholding. Okay. In which form should I give this disclosure? In form MBP1. Form MBP1. Okay. Now, power to take note of the disclosure of directors' interest and shareholding can be exercised only by means of resolutions passed at board meeting. We already saw this, Rule 8. Additional matters which can be done only at a meeting of the board. One of that. Okay. And MGT 14, you saw this long ago when you were studying intermediate. Okay, whenever you pass a special resolution and certain other types of resolution, you have to file MGT 14 under 117(3)G, read with Rule 24. Okay, no need to remember all this. But what the point is, whenever a disclosure is made, then MGT 14 should be filed within 30 days of passing of resolution under section 179(3). Right? So, means whenever you pass a resolution, making note of the disclosure of the director's interest, that has to be informed to the registrar through MGT 14 within 30 days. Okay. In case disclosure is not made, contract shall be voidable at the option of the company. Please note, 188 they said voidable at the option of the board. Here they say contract shall be voidable at the option of the company. In case there is any default, then that non-disclosure by the director, then the director who should have disclosed, he has to pay a penalty of 1 lakh. Is that all? Just an oral disclosure? No, not oral. Hello, Form MBP1. He has to file Form MBP. Yeah, I will answer your question. Event-based disclosure, oral disclosure. But is it only oral disclosure? No, sir. If it is made at a board meeting, there is a company secretary sitting there. It will be minuted at that meeting. The oral disclosure will be minuted at that meeting. And that minute becomes a record of the proceedings. I agreed it's oral, but it will not be oral after the meeting. It will be recorded. And minutes of board meetings, if properly maintained, you have read it in intermediate when you studied management and of the administration of a company, you studied it. Minutes of board meeting, if properly maintained, becomes records, evidence in a court of law. So I made a disclosure, you have to minute it. But if you are the director and you want to be safe side, ideally what you should do, you should prepare a list of companies, bring it to the board meeting and give it to the company secretary and get an acknowledgement from the donkey so that tomorrow they cannot say you did not disclose. So better you be careful. So to answer your question, is that all? Just an oral disclosure? I didn't say oral. It can be oral. Then you have to ensure that it is minuted. Ideally, don't make it oral. Give it in writing and be happy with it. See, nobody can prevent you from giving written disclosures. If you give oral disclosure, again I tell you, suppose a director makes a casual oral disclosure and then it is not minuted. In a court of law, then tomorrow the issue comes up. He will keep on standing up and saying, I made a disclosure, I made a disclosure. So when did you make the disclosure? At the board meeting. Where is it in the minutes? It is not there. No, that rascal company secretary, he did not minute it. Sorry, don't use unparliamentary language like that. The tribunal will tell and make you get out of the hall. So better not do that. Better have it in writing. So sometimes, when you ask me a question, you get more than you want, right? Okay, good. Moving on. They have given one exception to 184. This exception gets carried forward from long ago. From the old 297, it gets carried forward. Yeah. Section 184 does not apply to any contract or arrangement where any of the directors of the company or two or more of them together holds or hold more than 2% of the paid up share capital, not more than 2% of the paid up share capital in the other company. Section 184 does not apply to any contract arrangement where any of the directors of the company or two or more of them together holds or hold not more than 2% of the paid up share capital in the other company. Now, disclosure is needed in these two circumstances, right? So, director holds more than 2% share, or he is a promoter, a manager, a CEO. 184 does not talk about common directors. Do you see that? Nowhere it talks about common directors. I don't know if that was intended or otherwise. It does not. It only says the person should not hold more than 2%. It's a little confusing that way. Further, they give this exemption also, which means, see, in this example, no director of A Limited holds shares in B Limited and no director of B Limited holds shares in A Limited. But there is a common director between the two companies. Will the section apply? Will the section apply? Because of this exception, it will not apply. Stupid. I know, but what to do? Stupid. I'm not happy with this. Okay. But this was there in the old laws. Suppose A is a director here, but he is not holding more than 2%, section won't apply. A is a director here, A is a director here, and also a director here. A is a director here and also a director here. But no director of A Limited holds shares in B, no director of B holds in shares in A. It is not covered. Okay. So this is 184 with what's and all. Not a very comfortable section. I'm not very comfortable with 184. Let us see. But this is how it is. So if you do have any doubts, feel free to raise it so they can answer it. Before we move on to non-cash transactions. Okay. Thank you, Mr. Omnibus. Thank you. Now, we are talking about a transaction where when you say non-cash transaction, don't confuse with cash. What they mean is a transaction that is not settled in money, or rather it's not settled in specie by transfer of funds. Okay. Maybe you're getting some asset or something. You're buying an asset from a director or you're selling an asset to a director. Now, instead of giving shares, you are giving him, instead of giving him cash, you are giving him shares. Okay. So, in those cases, when you are acquiring assets for consideration other than cash, then section 192 applies. Prior approval of shareholders is required in general meeting for a company to enter into an arrangement by which a director of the company or its holding or subsidiary or associate company or a person connected with him. Who is that person? Not defined. Person connected with him. I don't know what they mean by connected. Are they talking about physically connected with him, as in the case of Siamese twins? I don't know if you're aware. Siamese twins are connected to each other. Just check out on the Google. You'll find there was a famous Siamese twins who used to be part of the P.T. Barnum show. In fact, they cannot move. A similar movie, I think, also was released with Surya acting in it. Our Tamil actor Surya acted in that movie. Two brothers, they'll be attached to each other. And it's very, very Siamese twins. And so is such a person connected with him like that? Or what do they mean by connected? It's very, very peculiar and funny. But then, so if any of these people, director of the company or director of holding company or director of subsidiary or director of associate company or a person connected with them acquires assets for consideration other than cash from the company, or the company acquires assets for consideration other than cash from such director or person so direct connected. In both these cases, you have to get the prior approval of shareholders. So Mr. M is the MD of the company. He has certain land. Okay, the land is being given to the company in consideration for which the company is not giving him money. They are allotting shares. In those cases, they say prior approval of the shareholders is required. Unfortunately, the word person connected has not been defined, thereby leads to ambiguity. We don't know. Now, the notice for approval of the resolution by the company or holding company in general meeting shall include the particulars of the arrangement, along with the value of the assets involved in such arrangement, duly calculated or duly valued by a registered valuer. Okay. So the value of the assets involved should be given by a registered valuer. Right. So I can give you another example also. Maybe the director is a research scientist in pharma industry. So he has created found out a new vaccine, and in his own research, he has done research and he's now ready to, he's already got the patent registered in his name. Now we want to acquire the patent. So patent is a intellectual property, right? And you want to go into, so for that you are going to give him sweat equity shares. Okay. So where the company is acquiring any asset, so intellectual property, you're giving him shares, then clearly 182 is also affected. Sweat equity shares affected, 192 also affected. Okay. So you should ensure that you're giving it you're getting the approval of the shareholders. Now, any arrangement entered into by a company or its holding company in contravention of 192 shall be voidable. Obviously, at the option of the company boss. When the minutes they say voidable, you should say voidable at who? Obviously, at the option, because this is where you have to go back to your contract act. Any voidable agreement contract shall be void is one which is avoidable or which can be avoided at the instance of one or more parties thereto, but not at the option of other or others. Who can avoid it? That party whose consent has been wrongly obtained. That party whose consent was not freely given has the right to avoid the contract. This is a very, very fundamental point. So the restitution of any money or other consideration, which is the subject matter of the arrangement, is no longer possible, and the company has been indemnified by any other person for any loss caused to it, or any rights are acquired bona fide for value and without notice of the contravention of the provisions of this section by any other person. Okay. So in these two cases, it is not voidable. In all other cases, it can be avoided by the company. Now, there should be a register of contracts or arrangements in which directors are interested. This is a very famous register. You will come across this register in your auditing paper. When? Where will you come across it? When you are auditing CARO. There they will say any loans or advances given to or received from a person whose name is mentioned or entity whose name is appearing in this register. So as a chartered accountant who are auditing, you should ensure that this register is being maintained by the company and that this register is being updated regularly. So very, very important point that you should remember, right? So every company shall keep one or more registers giving separately the particulars of all contracts or arrangements to which subsection 2 of section 184 or section 188 applies in such manner and containing such particulars as may be prescribed. Okay. After entering the particulars, such register or registers shall be placed before the next meeting of the board and signed by all the directors present at the meeting. So this is a very important point. Whenever that register is updated, the updated register should be placed before the board at the next board meeting and approved by the board members. Okay. A little bit. See, company law sometimes can be a little bit too boring and procedural. Okay, but not necessarily. Once you understand the logic, see. So the idea of this is any independent director should be aware of, any minority director should be aware of. Because some of these transactions, see, this has nothing to do with 192. 192, you have to go to the shareholders. 192 straight away shareholders, prior approval. It's over. This is 184, 188 transactions. Some of the 184, 188 transactions may be entered into by the board. So, or by the audit committee. Therefore, approval of audit committee. That is why it comes, the register comes up before the board at the next board meeting. Every director or key managerial personnel shall, within period of 30 days of appointment or relinquishment of his office, disclose to the company the particulars relating to his concern or interested in the other associations which are required. Okay. So, whenever they are appointed or relinquished, they should disclose there. The register shall be kept at the registered office of the company and it shall be open for inspection at such office business hours during and business hours, and extracts and copies shall be furnished by the company on payment of fee. This is open to all. This register is open to all, not restricted to members. Okay. It shall also be produced at the commencement of every annual general meeting and shall remain open during the continuance of the meeting. Idea is, suppose a member is looking at the register now and he sees some entry, he can ask a question on that in the meeting. See, once members attend annual general meeting, they are entitled to ask any question relating to the subject of the company's management on items of agenda. They can ask. That is why this is being given. And it is the duty of the board of directors to answer. Of course, this right or this duty is usually many investors and many rogue investors, I would say, they come attend AGMs and use this opportunity to ask all sorts of silly questions, baiting the management of the company, harassing the management of the company, etc. Register of contracts are arrangements in which directors are interested. Again, continuing. There is an exemption for the sale, purchase, or supply of any goods, materials, or services if the value of such goods, materials, or the cost of such services does not exceed 5 lakh rupees in the aggregate in any year. So, where the total is not exceeding 5 lakh, you need not make an entry in the register. Okay. Or in the case of a banking company, any collection of bills in the ordinary course of business for a related party need not be entered in the register. Otherwise, the register will come running into lakhs and lakhs of entries. So, they are saying no. In case there is any contravention of these provisions, then director 25,000 means maintenance of register. Okay. Director will be punishable with 25,000. Also, section 190 deals with contract of employment with managing or whole-time directors, not directions, sorry, directors. Every company shall keep at its registered office, where a contract of service with an MD or whole-time director is in writing, a copy of the contract, or where such contract is not in writing, a written memorandum setting out its terms, right? So it should be kept. The copies of the contract or the memorandum kept shall be open to inspection by any member of the company without payment of fee. Okay. And the provisions of this section shall not apply to a private company. Only for contracts with the employment with MD, you need not applicable to a private company. See, in the new company law regime, what about finance company? Balram Vaid, welcome, sir. Are you talking about this part? No, sir. Only for banking companies. To answer your question, this exemption applies only to banking company, not to a finance companies. Okay. And again, are we talking about collection of bills? Maybe you are a person who is having some experience in banking and finance, so I'm not aware of it. But can a non-banking company discount collection of bills? Is it possible by them? I think only banking companies can collect bills. Am I correct? In the ordinary course of business. So maybe I'm wrong. Maybe you possess more knowledge on banking and finance, because I'm of course I've audited banks and all that, but I'm not core into banking and finance like that. So maybe I'm wrong. Right. So the copies of shall be kept. Provisions don't apply to a private company. In case there is any contravention, then 25,000 company, every director 5,000 for each default. Okay. Section 181 talks about payment to director for loss of office in connection with transfer of undertaking, property or shares. Technically, I should have covered this in managerial remuneration. Normally, if I had been given the option, I would have taken this topic to managerial remuneration. But since the Board of Studies prefers the sequential order of sections, and since this comes somewhere in 190, 191 area, I'm unable to take it there, right? And give it to you. Therefore, I'm covering it here. Right. So, here we are paying compensation for loss of office to a director in connection with transfer of undertaking, property or shares. You remember in managerial remuneration, we saw compensation for loss of office of managerial personnel. We saw that, but I'm not taking it there because it is here. Okay. So here we are talking about payment to a director for loss of office in connection with transfer of undertaking, property or shares. That subject alone is covered here. Subject to the conditions of disclosure and approval as mentioned above, a director of a company may receive payment by way of compensation for loss of office or as consideration of retirement of office in connection with such loss or retirement from the transferee of such undertaking or from the transferee of shares or from any other person not being such a company. So when there's a transfer of shares or undertaking, the directors can receive compensation from the transferee of the undertaking or the shares. Okay. Any payment made by a company to a managing director or a whole-time director or manager by way of compensation for loss of office or consideration for retirement from such office in connection with such loss or retirement is subject to limits or priorities. Okay. So whenever you are going to pay compensation, you have to give these details: the name of the director, the amount proposed to be paid, event term, etc., etc. Okay. It's a pure theory. I'm not wasting your time. No compensation payable. You remember there also we saw no compensation is payable. Here also they say no compensation payable where the company is in default in repayment of public deposits or payment of interest. Company is in default in redemption of debentures. Company is default in repayment of any liability, secured or unsecured, payable to a bank. Company is in default of payment of any dues towards income tax, VAT, etc. Outstanding statutory dues to employees or workmen, or the company has not paid dividend on preference shares or not redeemed preference shares. In those cases, they cannot pay compensation for loss of office on account of transfer of undertaking. Okay. When they cannot pay compensation for loss of office, normally we saw that. When they cannot pay, that we've seen. This is only compensation payable for loss of office in connection with transfer of undertaking, property or shares, which is specifically exempted there, where the managing director or the managerial person resigns on account of transfer of undertaking, then he will not be eligible there, but he can be paid here. But for that, they are giving these conditions. Okay. Ideally, this can be studied along with that. But since logic, in terms of material, it comes here, I'm covering it. No director shall receive any payment or office. No director of company shall, in connection with receive any payment of office for the transfer of the whole or any part, or the transfer to any person of all the shares of any company, etc. Okay, we already saw this. If the payment is not approved for want of quorum, if you want to get this approved, paid, you have to get it approved in the board meeting. If it is not approved for want of quorum, either in a meeting or an urgent meeting, the proposal shall not be deemed to have been approved. You can go ahead and still pay it. Okay. Where a director of a company receives payment of any amount in contravention of the proposed payment is made before it is approved, the amount so received shall be refunded, deemed to have been received by him in trust. Okay. And any contravention by a director shall be punishable with a fine not less than 25. See the height there. See, this elaborate nonsense is meant to protect companies where there is a sale of undertaking, and as part of that sale, you are passing on some benefit to the MD or WTD. So that they want to control it here, is the point. Again, knee-jerk reaction from Satyam. Again, everything, when they see one fellow committing one fraud, they think everybody will do the same thing. And they are wasting one whole section to cover something that will never happen, is the point. Okay. So, almost last. In fact, we are going to complete this entire topic well before the time for closure. Let us see what we can do with the balance time. I have a certain idea, which I will try to implement with your support and cooperation. So, where one person company limited by shares or by guarantee enters into a contract with the sole member of the company who is also the director of the company shall, unless the contract is in writing, ensure that the terms of the contract or offer are contained in a memorandum or are recorded in the minutes of the first meeting of the board of the company held after entering into contract. So, one person company limited by shares or guarantee enters into a contract with the sole member. Classic Solomon and Solomon. Company owned by him, he is the main shareholder. That company is entering into a contract with him because the OPC is a separate legal entity from the member. So they can enter into it. But how to record it? That is why they say, look here. Either that contract should be in writing. Think about it. If he is one person company, only shareholder, fellow is entering into an oral contract. With whom? How? Maybe with the board of directors. Then they say, okay, whatever it is, the terms of the contract should be contained in a memorandum. And that memorandum should be signed and documented. Or it should be recorded in the minutes of the first meeting of the board of the company held next after entering into the contract. Now, suppose there is only, for OPC, only one director. Am I correct? Minimum one. Only one director. Then what happens? One director. Then what happens? Everything is this whole OPC stuff, I'm not very clear and comfortable, but still, once in a while, OPC becomes relevant. Currently, I had to offer a solution to a person who had certain issues when many members of the family could not become director or shareholders. So then at that time, without any option, I said, okay, one person is still free. That person can become, then that one person, let us form an OPC and we will do. So that we formed an OPC. Okay. So that company will also inform the registrar about this contract within 15 days of the date of approval by the board of directors. Okay. So this is the, okay. So the time now is 8:10 and I have come to the end of meetings on board of directors. One of the reasons is I realized, as I told you in my earlier session, the reason is in certain earlier sessions, I used to get a lot of queries, heavy queries. Means sometimes I will not be able to continue. They will bombard me with queries. But this batch, I'm having a highly exceptional and brilliant set of students who seem to understand everything that I'm saying. Or maybe the number of students who are enrolled on the list itself is less. So the number of, so sometimes it will become 1,000, 1,200 and all. So 1,200 people are there. Easily about 25, 30 of them will be very active. And they'll be bombarding with questions like Bonnie Joseph and all. Bonnie Joseph. They keep asking. Darasha used to ask questions, now not to be seen. Manacharla used to ask questions, now not to be seen. Anyway, no problem. Okay. So what I'm going to do with the remaining time is a big question. I had already, I was aware that this would happen. Therefore, what I'm going to do, I'll tell you. I'm going to, if you remember, I have given some assignments to you as part of my uploading. So 2 topics, I have already given you assignments, right? Now this session, with the remaining time available to me, I thought I could take up those assignments and try to give you some answers. Okay. In case you have not gone through those assignments, now it's a good opportunity for you to, we can discuss those topics. So we are going back to appointment and qualifications of directors, and we are going to see, okay, some the questions that I raised at that time and the answers. So let me change the date to today's date. Wow. Now, first question. I'm going to wait for you to give me answers. I'm not going to give the answers. Yeah, Mr. Pradeep, please ask questions in the next class. Welcome. But now you can start giving answers. Once upon a time, when I was teaching physical teaching for coaching classes in Chennai and the SIRC, I used to go around, southern region, I used to go around. Many students will be expert in asking questions. So I used to jocularly tell them, I wish you know the institute will have one question in the question paper, which is ask 5 relevant questions about section 188. That is the question. You don't have to give any answers. You simply have to ask questions. Many students will get very high marks because we know how to ask questions. And welcome, questions are welcome, questions are welcome. But unfortunately, in the institute, you have to give answers. So kindly start giving answers. I will also explain the answer. Thank you, Mr. Pradeep, for that nice word. Okay, now let's get into answers. Can I have an answer for this question? I'm waiting for the answer. So those of you who have an answer, kindly, from now on, we'll be going through these questions till the class gets over. I'll be going through assignment, this assignment, and the next one on managerial remuneration. And you can do. Okay. See, this is a fairly simple question. If you are not aware, then you can't answer. Okay, you should know what are the duties. And the question is, which of the following is not a duty of a director? So to exercise his duties with due and reasonable care, skill, and diligence, it's a duty. Not to make any profit out of any contract, is it a duty? Check out. To act in accordance with the articles of the company, subject to the provisions of, definitely it's a duty. Not to involve in a situation which we may have a direct or indirect interest that conflicts or possibly may conflict with the interest of the company. It is a duty. So the correct answer is, as rightly pointed out by Mr. Boni, B. Not to make any profit. Good. Great. Absolutely correct. Absolutely. They can make a profit, but it should not be undue gain or advantage. So to say that they should not make any profit is not correct. That is not a duty. Thank you, Pradeep ji, for the answer. And this is also fairly simple. Correct. C15 is the correct answer. Beautifully told by Boni. C15 is the correct answer. You will be tempted to put 2A2. Okay. C15. Correct. Now, little more meaty provision. For this, you should know the limits. That's why I said, if you don't know the limits, you can't answer this question. So this company, Mango Foods Limited, is an unlisted public company. Okay. So they want to know if they have to appoint a independent director and a woman director. Whether that woman director should be appointed or the independent director. Answers are given. Wow, a lot of people are joining. Aniket, thank you. Now let's have the answer for this. The company should appoint independent directors, but not woman director. B. Okay. Any more answers? Yes, because you are more than the independent directors, but woman director, the limit is higher. Therefore, need not appoint woman director, but you have to appoint independent director. That is why, independent director, woman director, audit committee, for all that, what is the limit? Appointment of company secretary, appointment of cost auditor. I'm sorry, not appointment of cost, that's not in the syllabus. Appointment of company secretary, appointment, all that compulsory appointment, all that you have to just prepare a chart and keep it. So day before the examination, quick revision. You can use these charts. Yeah. And idea is, given free time, I just don't want to waste your time. I'm giving you some revision on the assignment. That's all. I'm waiting for your answers. I can always give the answer, but it would be nice if one of you gives an answer, then I can move on. Mr. Pradeep says D. Shall we wait for any other answers? Mr. Boni, what is your answer? Mr. Aniket, what is your answer? Mr. Unfortunate, who has applied? Anybody else? D. Aniket Jain says B. How? C. What is the question? ABC Limited wishes to appoint the following person directors. Which of the following persons would not be disqualified? Would not be disqualified. Got it? Would not be disqualified. So, Mr. Unfortunate, who has applied to be adjudicated as insolvent, disqualified. Mr. Malicious, who has been convicted for tax evasion and sentenced to imprisonment in respect thereof for a period of less than 6 months, therefore not disqualified. Crazy, declared by competent court, disqualified. Casual approach, who has failed to pay the call money on shares held by him in ABC Limited within 6 months from the due date fixed for the payment of the call, clearly disqualified. Okay, so only B, Mr. Malicious, is not disqualified. So I don't know how you got D. Can somebody tell me how the D came? Even Bonnie is saying D. I hope I've justified B. Since many people are telling D, only Rashmi and Aniket are putting B. I would love to know how you got D. Okay. Let's be careful while going forward. That's all. That's the point. Which of the following category of directors can be removed by the members under section 169? Can be removed. Okay. The lack of knowledge can be easily corrected. That's all. You can easily correct lack of knowledge. Don't worry. That is why I'm doing this revision, so that you will be able to. Okay, no problem. Here we go. 5th question. It's like kaun banega crorepati. You can always go in this next question. Nothing wrong in getting one wrong. 5A. Which of the following can be removed? Ayya, directors appointed, Madam Shrishti Goyalji, directors appointed by the method of proportional representation cannot be removed. Directors appointed by the tribunal under section 242 of the Companies Act cannot be removed by the members. Okay. So, which leaves us only with independent directors. Can independent directors be removed? Yeah, why not? Because he's independent director doesn't mean that he cannot be removed. He can be removed. If you find him to be suitable, remove him. Removing is different. Removing 169, you know the procedure for that. Okay. Whereas vacation is different. Independent, if you don't want, you can remove. So C is the correct answer. C, independent directors, is the correct answer. Right? Got it? So 5A, D. I'll tell you where you got this feeling from. Most of you are worried about independent directors. You are thinking somewhere in the heart of your heart that independent directors cannot be removed by the members. No. Independent directors can be removed by the members. Okay. Only the above A and B category, they cannot be removed by the members. That's all. Rest everybody can be removed by the members at the cost. The members can decide. Okay. This is about independence. And here, you don't have the comfort of ABC anymore. Here you have to slightly descriptive questions. You have to actually write some kind of an answer, conclusion at least you have to write. So please do not put yes, no, like that. Okay. One, can Mr. Vishesh Gupta be appointed as independent director? You can say yes or no. Agreed. In view of the immense knowledge of Mr. Vishesh Gupta, the company is proposed to providing with, is it permissible? You can use yes or no. No problem. For the sake of our class, you can use. But in the exam, you have to write descriptively. You can't just put yes, no, 6, 1, yes, 2, no, whatever. Yes, no. And then no, yes, 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 yes. Yes, no, no, yes, 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 no, no. Whatever you can't put. You have to write. Okay. This is an interesting question. I'm expecting at least 1 or 2 people to answer before I give the answer. Any quick answers, please? Are you ready? See, you have to remember the provision. Otherwise, keep a book with you. Maybe if you have the Board of Studies material with you, use the material to see and tell. No problem. Refer to the book and give an answer. Why not? Most of you will be having the Board of Studies study material. Na? Use that to refer and tell. Hello, anybody? Any answers? I'm waiting for the answer. Problem with this type of format is, if nobody gives any reply, I will not know whether any reply will come or not. Can somebody quickly say you're going to answer or not? Can anybody just quickly confirm if you're going to answer or not? If you want me to answer, you answer like that. Okay, not able to answer. I don't know why. See, basically, what is the question here? Whether Mr. Shailesh is independent or not. Vishesh is independent or not. For that, the director or the relative should not hold more than the limit is there, 50 lakhs. Okay, here he is holding 5 lakh shares in the company. And the face value is rupees 5. Okay. Into 5 lakhs is 25 lakhs. Whereas for a relative, that section gives 166. You remember we studied. It gives a limit of 50 lakhs. So this is less than that. You should not take the NSE trading value. You cannot take 4,682 into 5 lakhs. You will get a huge number. No. So first question answer is no. Sorry, yes. Can Vishesh Gupta be appointed? Yes. As the face value of the shares is less than 50 lakhs, the exemption will apply. Now, we already saw in that you can pay remuneration to the independent director, which is normally payable to a non-executive director based on profits or whatever, but you cannot give him stock option. So answer is no. Fee based on profits can be paid, but stock option shall not be provided. This is the answer. Okay. Moving on. See, when I was preparing these slides, I think this was during pandemic, and I was bored and I was binge watching movies. Binge watching. So one of the movies that I watched at that time was Zootopia. So You'll find Zootopia. I was binge watching all those. What is that? This guy. Once Upon a Time in Hollywood. Okay, so that the director, forget his name. Binge watching those movies and like Pulp Fiction and all that. Okay, that's why you'll find Django. Okay, Django Unleashed. What about that one? Unchained, Django, and Tarantino. Okay, Quentin Tarantino. I was watching Quentin Tarantino movies. So some of the names would be from those movies. Zootopia. So Gardab was appointed by the board of directors of Zootopia. He resigned for personal reasons. They appointed Mr. Bandar in the casual vacancy created by the resignation of Mr. Gardab. So is the appointment of Mr. Bandar valid? I think this is very easy. Please, you have been taught. I'm only asking you to recall what I taught in the class. When sometimes, in my classes, when I talk about directors, I refer to them as Mr. Donkey and Mr. Monkey. Here, I thought I will as well, for a larger pan-India audience, I thought better to use the equivalent Hindi words, Gardab and Bandar. Is the appointment of Mr. Bandar valid? Okay. Any one person can answer, give any answer. See, yes, no. Even you don't turn to give reasoning, no problem. Don't give reasoning. Huh? Boni, what is this 30 days valid? Beyond 30 days. You are writing your own company law. Beautiful. Wonderful. See, this is simple. Answer given by Aniket Jain is correct. No, because director is not appointed in the AGM. Rather, don't say AGM, Aniket ji. Director is not appointed by the members at general meeting. Any general meeting. Not necessarily AGM. Yes. Is the appointment of Mr. Bandar valid? Yes. No, it is not valid. It is not valid. Mr. Gardab was appointed by the board and not by the shareholders at general meeting. So, not necessarily in AGM, Mr. Aniket. It can be in any general meeting. So long as it's at a general meeting, that vacancy can be filled under 161(4). But in this case, Gardab's vacancy was not at Gardab was not appointed by the members at general meeting. It was appointed by the board. Therefore, casual vacancy created by his resignation cannot be filled under section 161(4) by appointing Mr. Bandar. Now, see my answer. This is a standard answer which will get you full marks in the examination. For example, this question in the exam would carry something like 2 to 3 marks. 2 to 3 marks. If you write this answer, you will get for 2, 1.5. For 3, 2.5. Obviously, I won't give you 2 on 2, 3 on 3 and all. 2.5. Or 2 on 3, 1.5 on 2, sure. You will get it. That's why, writing these small questions, pick up those small 2, 3 mark questions. Because if you get those questions right now, they have to give you 75 to 80% or even 90% of the marks they will give you straight away. So pick off those questions. See, I'll tell you a simple strategy. In the examination, suppose you have a single question that carries 8 marks or another question that has 3 parts, each part carrying 2, 3, 4 like that. Then answer the part-oriented question rather than the full question. Because suppose you write an answer for a 6-mark question, even the most liberal examiner will not give you more than 60% of it. Whereas if you pick off in small quantities now, if you have answered correctly and neatly, correctly, they'll be tempted to give you more because they wouldn't mind giving you more. What is 1.5 marks? Okay, give it. Okay, what is 2 marks? Give it. 2.5 marks. So when they all accumulate, no, suddenly it will be a huge total. It has happened to me when I was an paper corrector for company secretaries. I will be tempted to give more marks to a guy who answers these questions correctly. Suddenly, when I total up, I find, oh, I've given more than 56, 55 marks I've given in total. Then I can't go back and do anything about it. Simply have to re-verify my total and go on with my life to the next paper. So. Okay, here we go. Zootopia Industries Limited has 5,500 small shareholders. 700 small shareholders have left their intention to appoint Mr. Kara Ghosh to represent them. Mr. Akrosh Sin, the managing director, is of the opinion that the appointment is not valid as it should have been signed by not less than 1,000 small shareholders. So you are attending that meeting with Mr. Akrosh Sin and you are asking him, sir, where did you find it, sir? He said, I read it somewhere. Okay. Is this view correct? Will your answer be different if you are informed that Mr. Karagosh is not holding any shares in Zootopia? She is not a shareholder in Zootopia. Will your answer still be the same? Or will it be different? Or you are informed that Karagosh is already a small shareholders director in Jungli Informatics and Aranya Hotels. So can I have answers for this? I think most of you, the problem is you have forgotten those provisions. I can understand what's happening here. No problem. Refer to the provision and answer. Even if you've forgotten, it's okay. Re-revision. Read it again. Appointment of directors by small shareholders. So 700 small shareholders have left their intention. So it is 1,000 small shareholders or shareholders holding 10%. 10% of the total number of small shareholders, correct? So what is 10% of total number of small shareholders? 550. How many have left? 700. More than 550. So it is correct. Akrosh Singh's view is wrong. The view held by Mr. Akrosh Singh is not correct. But you try and tell this to Akrosh Singh and get away from his room. Okay? That will be the problem for you. But what to do? You'll have to convince him somehow. Okay. Mrs. Karagosh is not holding any shares in Zootopia Industries Limited. No problem. A small shareholder director need not be a small shareholder, need not even be a shareholder. Ms. Karagosh is, I'm sorry, I'm giving you these answers because you're not giving any answers. I was expecting some answers from you all. I thought you would pile up with answers and pressure me with answers. So I'm not getting those answers. No problem. You still have one more option. Yeah, I'm going to take up another topic also, assignment. We'll see. Okay. So the view held by Mr. Akrosh Sin is incorrect. We already saw that. A person shall not hold the position of small shareholders director shall hold in not more than 2 companies at the same time. Therefore, as Ms. Ghosh is already small shareholders in Jungli and Aranya, she cannot be appointed in Zootopia Industries Limited. Okay. Are you comfortable with it? Because I don't see any answers coming now. So have you understood? Clear? Can somebody confirm that they have understood the answers or they are having any doubts on the answer? Okay. No. Now Kara Ghosh is now a small shareholder director. She attends the meeting of Zootopia Limited, finds the company is being seriously mismanaged by Agrosin. Later on, we'll be seeing this when I come to operation and mismanagement. We'll again go to Zootopia and all that. Don't worry about mismanagement. But as of now, Kara Ghosh finds that it's being seriously mismanaged by Agrosin, the managing director and his cronies on the board. She objects to this vehemently in the board meeting. They are simply laughing at her and running, saying, what, do anything you want. So she gets frustrated. So she sends her resignation in writing to the board of the company on 2/5/2021. On 15/7/2021, a penalty is levied on the company and its directors under the Act for failure to pay interim dividend announced on 21/5. Whether Kara Ghosh is liable for this penalty, I think you have to answer this question. I am not going to answer it. It's a simple question on resignation. Dividend was announced on 21/5. Penalty was levied on 15/7 for not paying interim dividend. Kara Ghosh resigned on 2/5 in writing to the board on 2/5. Is Kara Ghosh liable for this penalty? No. Absolutely correct. Okay. Why? Can you give a reasoning also, Mr. Jain? Why? Why is she not liable? Because the resignation will take effect on the date of receipt by the company. She gave it at the board meeting. So, receipt by the company on which day? 2/5. Now, on 2/5, see that dividend was declared, announced on 21/5. She resigned on 2/5. So, she was not even a party to the declaration. Therefore, forget 30 days time is there, then only it has to be paid within 30 days. 5 days it has to be deposited in independent. It has to be paid within 30 days, etc. She was not there. She is not liable for any offenses committed by the company after that date, thereafter. Therefore, she is not liable for the penalty for non-payment of interim dividend announced on 21/5. Lastly, 10th question you have Mr. Neil Tendua, a director of Zootopia again. Wow. Zootopia Industries Limited. He was arrested for insider trading and sentenced to imprisonment for 3 years on 15/5/2021. On 16/5/2021, he attended a board meeting of the company and voted on certain resolutions. Explain the legal consequences of Mr. Tendue's actions. Okay, this is a very, very descriptive question which requires you to be aware of the penalties. So let us see. I'm not expecting an answer from you. This is a very, very descriptive question. Very pure descriptive question. It needs elaborate answer. If you're in, a director shall automatically vacate office if he is convicted by a court of any offense, whether involving moral turpitude or otherwise, and sentenced in respect thereof to imprisonment for not less than 6 months. You studied it. Okay. 167. Now, so, yeah, he was arrested for insider trading, offense, sentenced to imprisonment, 3 years on 15/5. So, on 15/5, he has vacated office. Now he attends a board meeting on 16/5. This is a violation of law. And once he is vacated, he should not act as a director. So Mr. Tendue is liable to pay a penalty of not less than ₹1 lakh up to 5 lakhs for functioning as a director, even when knowing that the office of director held by him has become vacant on account of any of the disqualifications specified in 167(1). Yes, he is a disqualified. No, disqualified, no, he is vacating office. He will automatically vacate office. Thereafter, he will be disqualified. Small difference. He will vacate office. Thereafter, he will be disqualified. Okay, this is the fantastic. Now, since I have some more time today, I was anticipating this. That's why I was keeping these assignments in reserve for you. I could do this. So there again, I'll go to one more topic, which is appointment and remuneration of managerial personnel. Okay. This was a case study. I hope you remember it. This was a case study, and I had uploaded it in the portal. Our good old friends, the Adekars. Okay, we go back to the Adekar story. You are familiar with that board, yeah? You already we did a practical problem during my appointment of directors, retirement of directors by rotation, 2/3, blah, blah. You know all these guys. Palekar, Narekar, Shinde, Srinivasan, Malati Jayaraman, everybody, Wagmare, Balekar, same story. Here, the only extra dimension I'm taking is every Narsimhan, everybody, totally 15, blah, blah, blah. I'm taking this board structure and I am using it to give you this additional information. Make a note of it if you want. The company would like to reward its directors well, but in accordance with Companies Act 2013. So during the financial year ended 31st March 2019, the company made a net profit before tax of 750 crores. This included 150 crores being profit on sale of land belonging to the company at Pune. Right? Point. So this is we are linking it with 197 and 198, read with Schedule 5. Okay. So during financial year ended 31st March 2020, the company made a net profit before tax of rupees 900 crores. Wow. In fact, that is a reality also. During pandemic, that 2020 year was a great year because it was announced during pandemic, but the performance was pre-pandemic performance. 21 was a disaster because of pandemic. So it fell to 500 crores tax profit, pre-tax profit. But pre-tax profit. Okay. So if you remember, tax should not be taken into account. Before tax only, we have to calculate managerial remuneration. Balance sheet is also given. We'll come back to it again for another particular purpose. Now, there are 3 executive directors who are appointed under Schedule 5, read with Section 187. Who are they? Obviously, the family, Vijay, Vimala, and Vikram. Vijay is the MD, he is getting 1.5 crores per month. That is chicken shit when compared to what Adani and Ambani are all getting. Don't get frightened, 1.5 crores per month. Why not? If profit is there, he is taking his profit. Yeah, who are you to ask? Vijay Adekar, Vimala Adekar, 50 lakhs. Vikram Adekar, 25 lakhs. Take it, enjoy. See, so long as there is a profit, you can pay. Right? Now, so the company would like to pay Mr. Vijay Adekar a commission based on profits, computed in accordance with Section 198. What is the maximum percentage that can be so paid? Can anybody give me an answer? You will be tempted to put 5. You will be tempted to put 5. 5% as the correct answer. Be careful. You are already going to pay him 1.5 crores per month for 12 months. So 1.5 crores per month for 12 months comes 18 crores. How much is he eligible totally? Only 5%. He is eligible in total for only 5%. So what is 5% of which year? Which year is this? 19. So in 19, what is my profit? 750 crore. But it includes capital profit, which cannot be considered. Under 198, I have to disallow capital profit. So 750 minus 150, 600. So on that 600, I can pay him 5% in total, which is 30 crores. But out of the 30 crore, you are already paying him 18 crores. 1.5 into thing. Balance only can be paid. That is another 12 crores by way of commission. That 12 crores as a percentage on profit will come to 2% of the profits. 12 divided by 600 into 100 will give you 2% of the profit. So the correct answer is 2%. Friends, have you understood this? See, this is the danger with multiple choice questions. See, suppose it's a descriptive, you would have written all this and you would have got some marks for it. But in MCQ, straight away, you will be tempted to write 5%. In fact, I was using the same slides for another institute activity in southern region, where they wanted me to do a refresher course. And I was doing this and using these slides. Anyway, it's the institute slides. Now, what is that? So I was using it. And one student, easily about, out of, I don't know how many were there, but about 15 students gave 5% as the answer. Consistently, this mistake was made by students. This I'm sure you should be easily able to answer. The maximum remuneration that can be paid to all the non-executive directors, including independent directors, for the year 31st March 2020. So 2020 profit is how much? Sorry. 2020, 900 crores. Okay, how much can I pay to the independent directors? 1%, because already three MDs are, three fellows are there, no? One MD, one WTD and all. So how can I pay 3%? I can pay only, I can't pay 27 crore. I can pay only 1%, which is 9 crores. So 9 crores is the correct answer. Right? 9 crore. Effective capital. Simply, they are just asking effective capital. Which year and all, you need not bother. Okay. 9 is correct. Aniket Jain gives the right answer, 9. How to calculate the effective capital? You take the equity share capital. You take the preference capital, because paid up capital includes preference share capital also. Securities premium account can be considered. See, debenture redemption reserve can be considered here. Because here they are not using the words free reserve. Securities premium account included, general reserve included, profit loss account included. Then long-term debts, 10% debentures and term loan from IDBI. What you should not include is the short-term debts. What you cannot include is cash credit from SBI, short-term, current liabilities and provision, no. Okay, you can't take. Term loan, long-term, 10%. Revaluation reserve, not to be considered. Suppose you have debenture redemption reserve, can be considered. Capital redemption reserve can be considered, because they are not telling free reserves. Definition of effective capital. Okay. So do it. And less any non-current investments, you have to reduce it. So you get the answer, 1,450 crores. Now, during the financial year ended 31st March 2021, it is proposed to appoint Mr. Vikram Adekar as Managing Director of Adekar Ancillaries Limited, a company with an effective capital of 150 crores, in which Adekar Industries has 40% stake, associated company. That's okay. He's going to be appointed as MD in a second company. Now, the procedure for this appointment. Unanimous resolution means a resolution agreed to by all present. Just for those of you who, because you should not confuse unanimous resolution with anonymous resolution. Anonymous means author unknown. Unanimous means agreed to by all. Okay. I'm not joking. One AC student, he wrote anonymous resolution. I was thinking, what is this anonymous resolution? Okay. Maybe he was meaning secret ballot. No secret ballots in company. Registered folio number has to be given. Name of the member will be known. Okay. The point is this. Special resolution passed at a meeting of Adekar Industries. Ordinary resolution passed at a general meeting of Adekar Ancillaries. Unanimous passed at Adekar Ancillary. Unanimous passed at Adekar Industry. Okay. Without boring you or without giving you any more pain, let me give the answer, which is unanimous resolutions to be passed by the second company. Please understand, he is already a director in Adekar Industries. Now Adekar Ancillaries is considering, now the board of directors of Adekar Ancillary should pass a unanimous resolution. Got it? The maximum remuneration that can be paid to Mr. Vikram. See, we are appointing Vikram Adekar. Okay. The maximum remuneration that can be paid to Mr. Vikram Adekar from Adekar Industries Limited as well as Adekar Ancillary. Remember, Schedule 5. part 2, section 4. Okay. Where he is receiving it from, I think 4 or 5, I think 5 section. Where he is receiving it from part 2, section 5, I think 5 or 4. He is receiving it from 2 companies, then he is entitled to remuneration from both the companies, but it will be restricted to the maximum remuneration receivable from any one of them. Okay, which is, you have to calculate the receivable from both. So for 2021, okay, 5% of 500 crores, 25 crores. Since here, Adhikar ancillary, we do not know, assuming that we go by effective capital, you can pay him 5% of 500 crores or 1.20 crores, whichever is higher. So, which you'll have to restrict yourself to the higher of the two, right? So, 25 crores, 5% of 500 crores or 1.20, whichever is higher. We come back to Zootopia again with one more question. The members of Zootopia finally managed to remove Akrosh in class. How they will do it, that story we will come to in operation and mismanagement. How the members will be able to remove Akrosh Singh, what is the procedure for that? I'm going to discuss on Friday in operation and mismanagement. Right now, the question is they have taken over. Now the board is consisting only of non-executive directors. Karagosh is the chairperson, Chamakdar Lomri is the one of the directors. So beautifully they are now running. No manager, no all-time director. Company made a decent profit. And the board would like to take some remuneration. What is the maximum percentage? This is something that you should be able to tell. But since time is running out, I will give the answer. Where there is no MD or WTD, the maximum percentage is 3. For all the part-time directors taken together, 197. Nahu Shah is already a managing director in Omni Industries and Omega Traders. It's now proposed to appoint him in Micro also. Which of the following is correct? Mr. Shah cannot be appointed as MD of Micro Industries Limited. Why? He can be MD in only 2 companies. Third company is not possible. Second company, unanimous. Third company, not possible. Okay. Gardab was removed as a whole-time director of Aranya Hotels Limited. You remember Gardabji? Okay. He was appointed on 1st April 2020 for 5 years and was removed on 30th June 2021. His total remuneration earned till date of removal was 18 lakhs. What is the compensation he can receive? The compensation is based on the average remuneration received by him during the immediately preceding 3 years or his period of office, whichever is less. That can be paid for the remaining period of office or 3 years, whichever is lower. So 18 lakhs for 1.5 years. So April to March 1 year, then April, May, June 2021, 3 months. 12 plus 3, 15 months. So 15 months he has received 18 lakhs. Average remuneration earned by him is 18 divided by 15 per month. Into how many months he would have been in office? 5 years he can be now. But he was removed in the 15th month. So he can definitely receive for another 3 years. So remaining 36 months he will be eligible. So 43.20, which is 18 divided by 15 into 36. That is the calculation. Here, only difference is in my formula in my slide, it will be annual. So how to do it if it is month? That's all. Take month and do it. That's all. 12. That's all. So 3 years will be 36. Divide. You'll get monthly. Then multiply by 36 or 24. If it is only 2 years left, 24. If only 1 year left, that number will be taken. So, okay. So at last we come to a end to this topic, to this meeting, director's topic itself. And I thank you for a wonderful support and cooperation. Thank you, Aniket, for giving one more answer correctly. 3% is correct. So great of you to have, to be sort of, there. And next class, as I told you, we will take up operation and mismanagement. In the meantime, I will upload these slides and also one more assignment, inshallah, for meetings of board and director. But that, if I get time on the last class, after I finish operation and mismanagement, in that class, if I have some time, I will discuss those questions. And operation and mismanagement also, I will upload some questions, inshallah, and that I will also. Okay. Thank you for your patient support and listening. Wishing you all a great evening ahead. Bye. Good night. Thank you.